Morning all, how we doing? Morning Fabio. Right, just going to start with a quick recap of yesterday as usual. And then we'll have a look at the news. It's 10 minutes till Frankfurt opens. So we'll have a quick look at the indices before that as well. Just kick off, I've just taken a couple of positions. I've put them in the Telegram group this morning. I had no exposure on at all, so I had a look through the to the charts this morning just to see what was going on. The only exposure I've got is oil at the minute. So I've just added an Aussie CAD this morning. I like the look of this up here. We basically are, for the last sort of couple of weeks, we've been in this nice range. But if you look at it on the 4 hour, we're fairly nicely dropping at the moment. So we just put in this low, we kind of double bottomed and then we put in another low. We've been gradually grinding down. So I'm looking at this basically to be a new lower high for a new drop down. We're nicely respecting the 24. We're staying under the 24. Canadian dollar should power up with oil. Oil at the moment is a little weak, but we should get that price going up, which should help the CAD as well. So I'm looking for CAD strength basically. Aussie's fairly neutral at the moment. So I've got into another short on that. Basically just be targeting initially the lows and see what happens down there. And I took a New Zealand dollar Swiss this morning. So looking at a break of this low this morning, which we just done. It's just tagged me in. It's just sort of sitting there at the moment. Look at this wick. New Zealand dollar's so bad for wicks. It's awful. Morning, David. So yeah, looking for a drop on that one as well. We are on day 4 of this accumulation. These highs, we keep tapping into these highs and it is not letting price past this level at the minute. So I spotted this morning. We've tapped into it sort of 4 or 5 times and it's not getting through. If it does get through, there's a good chance it's going to push fairly hard, but I'm looking for some Swiss franc strength, and again the New Zealand is fairly neutral. So I'm looking basically for a drop on this one. 4 hour is obviously in decline. We've got this new low that was put in. We've come up into this nice area of balance and accumulation, rejected it, pushed back down, made a new lower high, made a new lower low. So I'm looking for this to be the spot where we start the next move. Failing that, we're going to come back up potentially and tap that, which means we'll be in the 24.72. Failing that, obviously, it's a big push all the way up there, which is going to be a few ADR. So it's either going to work or it's not. Don't know. But I like the look of it at the minute. And based on some Swiss franc strength, the Swissie's getting a little bit more back to how it used to be with those intermittent bursts of strength. So hopefully that's going to start to kick in, and there's nothing really on the New Zealand dollar. The rate came out as expected. New Zealand, we didn't see a massive strength come through off the New Zealand dollar, so I suspect the New Zealand is just going to stay neutral and remain to just do as it does, which is just churn along and not really do anything apart from based on news. Next week we've got a fair bit of New Zealand dollar news coming out, and Aussie news. We've got New Zealand CPIs, we've got the Aussie monetary policy, we've got low speaking. So there's a few New Zealand and Aussie events next week which could stir those up a little bit. And obviously with the CAD, we've got CPI coming out. There's nothing on the Swissy. So there's a few news articles next week which basically could move both of these, which is why I've chosen those to get into. So yeah, a little bit more exposure on because I didn't have anything, so just got no risk on, can't make any money. So Vink, on New Zealand dollar Swiss on your broker, the wick is small. Yeah, it depends on your broker's liquidity. It's broker based, you know. It doesn't matter who you choose as a broker. You get these. And this is what I keep saying about volume and liquidity with brokers. You can't use any volume indicators in Forex trading at all because there is no such thing as a centralized volume exchange on the Forex market. Futures, you have a centralized exchange. Everybody goes through the Chicago Mercantile Exchange. Everybody sees the same data, the same volumes, the same price, same everything. With FX, you see what your broker gives you. It's a contract for difference you're trading. So your broker is giving you a contract for the difference in price between what he wants. You know, it's just basically, it's a completely different, made up, non-physical product you're trading. So the broker can do what he likes with it. And they quite often do. This is a typical broker action. This is why we don't use stops. It doesn't matter who you choose, yeah. All brokers will do this. AXA used to do it to me, IC Markets. Some of them do it worse than others. So you know after a while which ones are the real bad ones. Robo don't do it very much, but at the end of the day, if someone dumps 10 lots short or in New Zealand dollar, and there is no liquidity in there, and there's only 3 lots wanting to go long on it, they're going to have to go out and find liquidity. If they can't find liquidity for it, they're going to go and find the price to get you filled at. The price to get you filled at is down there. It's down there. Nothing you can do. But also, they know there's a lot of liquidity down there, and they will reach for that and grab it and take out everybody's stops that went long yesterday. Put in a new high, everyone went long, they came down and took out that. The whole thing is manipulated. And as soon as you understand that you've got no control over this, the sooner you'll go, well, just get in and get out. It's literally all you can do. It goes up, goes down, goes sideways. You just got to get in and get out with the best you possibly can. So it doesn't matter who you use really as a broker. They're all going to do it to you at some point to some extent. New Zealand dollar is the one that you will get stopped out on the most though. That one seems to be manipulated a lot more. There's a lot less liquidity on the switch over to Asia basically. This is the thing. Don't forget this is the swap. You know, market shuts 10 o'clock UK time, then New Zealand opens. There's a 5-minute gap there where you've got slippage and liquidity issues, and that's basically where it all goes wrong. So, morning Diamond, morning Trevor, morning Franco. So got into those, and I've got oil on. Yesterday banked, had a wicked day yesterday, 1.73%, really big day. So 4.14% on the week, 10% on the month. I'm storming month at the moment, which is nice. Long way to continue. So closed out yesterday. Some oil. So there's a few trades on oil. Markets just opened. Big flurry of sellers came in there. So just quickly on the DAX while the markets opened, we had a little gap up this morning. We came back down, immediately filled that gap in. Difficult to tell where we're going to go today. I'll have a look at the indices straight away, but seems to be selling off pretty hard at the moment. Bit of indecision candle coming in. I've got a position on in the ES at the moment, so that's why I'm just watching the DAX, just seeing what it does. ES is just down at the lows of the Globex session at the moment, so I'm just... No, there's balls coming in. Just going to close that out. So yesterday's positions, oops, here we go, now it's going to go short. There we go, blimey. There's a big sell out at the bottom of the ES there. So yeah, oil took off. I did a couple of drawdown controls on this yesterday. I put them all in the group, but where's my pen gone? So I was a little bit overloaded up here. I had two positions way too close together because one got on with the EA and one got on manually. So I took two positions. I took one at ADR. This was ADR low, and then I took another one with the EA as we pushed up and got a reversal on M5. So I took that one off there and did some drawdown control there. Took that one off there and did some drawdown control again there. So I just reduced that 0.3 down to a 0.1, which is why you see two losses in there for 20 and 30, and I banked 55 and 84. So using roughly half the profits to reduce the overexposure that I had. So I'm quite happy with my exposure now on oil. I've just got that one there and that one there with a little bit of an orphan in the middle. So the spacing's pretty good now. Should be around about 30 pips apart on oil, basically half an ADR. It's coming down again this morning, so I'll add on again down at these lows. But I like the look of oil. It's in a good spot down at this support. We rejected it beautifully yesterday. It's a lovely rejection yesterday. So we had a whacking great hammer. Came down through this level that I'd highlighted as being the support level. It all got bought up. So we're just coming down to retest at the moment. So hopefully looking for that to bounce. Also closed out a US dollar CAD. Short. So I had two shorts on this. That one and that one. So this was an ADR hit. We hit 250 ADR yesterday. So I got in at 225 ADR. We pushed up to 250 ADR. I got in at 250 ADR. Perfect entry. Look at that one, M5. This is Mr. Sniper. Lovely little entry that. Couldn't get much close to the highs. So we pushed up to 250. As soon as we hit 250, I got in. We tanked. I took that one off straight away. And then I was ready to get in on a double top bounce, but we didn't get it. It just came down next to that second position. So that was an ADR reversal trade. So it's a quick scalp in and out. Aussie dollar Swiss. That was yesterday, wasn't it? Got out of that one as a short, so I went flat on that one, and US dollar CAD took those off there. So yeah, exited all my longs on US dollar CAD as well on the push. So got out of all the longs. Should have held it, obviously. No idea I was going to go up to 250 ADR, but as we got up to 250 ADR, I flipped short and went the other way. So I made a nice bit of money out of US dollar CAD yesterday. So yeah, so that's what I did yesterday. That's what I've got on at the moment. Big indecision candle on the DAX. Right, so let's look at the DAX. Just leave the crickets there for a minute. So daily, we had a nice down day yesterday on the DAX. We came back down and retested. Now we got a little bit of confusion on the indices at the minute, or a little bit of divergence basically. So the DAX came down and tapped into these lows and then rejected a little bit. We're pushing down again hard this morning, but the structure on the DAX is still definitely bearish. We're still holding below the 24. And we are looking like the DAX wants to fall out of bed this morning because we're coming down pretty damn hard. So DAX is looking like a nice short opportunity at the moment. Sorry, let me just got to see what's. So I just need to close the position out. Oh, I'm waiting closed. Just bank 950 on that move. Oh no, 887. Didn't quite get the fill I wanted on that. So I just had a short on from the open on the break. So yeah, DAX, I'm looking for shorts on today to come back down, potentially retest yesterday's low. So we've got a fair old distance to go back down to here. The US indices, we got a bit of a different story on. So this is what I mean by the divergence we've got on the indices at the moment. The German stock market is a lot more bearish, morning Kennelly, than the US markets at the moment. So yesterday on the US markets, we had this whacking great indecision candle that went in on Wednesday. We gapped down, pushed down, pushed back up again. So we actually ended up bearish yesterday. Then we've gapped up and we pushed back down again. So all the US indices basically came down and tapped into support levels and bounced back up again. Now we're looking bearish, whereas the DAX is the opposite. But the market structure on this is still a lower high there. We've just put in a lower low. So today's price action is going to be quite tricky because we could well be pushing up into that area there to put in a new lower high before we come down and put in a new lower low. But the fact that we've tapped in here could well just tank today. So it's a very tricky day today. Obviously the market's open very, very bearish, as you can see, across all indices. So it's a difficult one. The other thing that worries me about these is the fact that we obviously had this big flush, but this is the biggest flush we've had since the bear market started, which pushed us down to this low. We then broke up into the 24, and since then, for the last 2 weeks, we haven't actually gone anywhere. If you look at a weekly chart, we've got this control candle at the moment here, which is the push up from the 3-week bear drop. We haven't broken out of this level at all at the moment, and the next candle that we had, we didn't break. This candle here, we haven't broken. So we are just putting in inside bar after inside bar after inside bar on the moment, which is obviously an accumulation. So for me right now, on all these indices, I've got a slightly bearish stance, but in reality, we're in an accumulation. We're not going anywhere. So basically we're down at the lows at the minute. So there is an argument for a push back up somewhere towards these highs next. Bear in mind we're coming into summer months, summer trading, which is light liquidity. So in times of light liquidity, you get lots of slippage, you get slow movement, you get slippage which makes fast big candles, but you don't get a lot of directional bias. So I think the indices are going to become a little bit more tricky to trade at the moment, but I would still be more of a bearish stance on it. I think we're going to get more down days than we are up days, or down sessions than up sessions. But just be aware that we are entering on all of these now a kind of range. But look at the Nasdaq. The Nasdaq's actually tightening, so we could well see a contraction as we start now going into the summer weeks before we get the next leg down. So fairly tricky and might be a bit whippy. See, that's a huge liquidity run on the lows there, and now we're pushing up higher again. So in and out fast on the indices. Dow, again, same thing. We came down, we pushed out of those lows, and we've pushed back up again. So indices, a little bit of a mixed bag, a little bit of confusion. Yesterday certainly looks like a bull day. And after we've had a 3-day drop, that's quite possibly a reversal candle. We pushed down this morning, done the gap fill. So this could well be a bull day today. But look for signs. So yeah, very difficult to tell what's going on those. If anybody's got anything they want to look at, by the way, just let me know, because I haven't got a lot to analyse. I've done my analysis in bed this morning on my tablet. What I've got into is what I'm interested in. I'll whiz through all the FX pairs, but the market's pretty crap at the moment. So lots of good movement, but we haven't gone anywhere. So intraday scalping, I think ADR reversals at the moment we need to be looking at. We had loads of ADR reversals yesterday. Virtually all of them played out beautifully. So need to be watching the ADRs. News today, we've got retail sales this afternoon on the US dollar at 130, so be aware of that. That's pre-market. Then we've got University of Michigan consumer sentiment coming out after the market open at 3 o'clock. So UOM is not a reactive news event. It is something that the markets, the analysts use to scorecard. They pay quite a lot of attention to it, which is why it's red. It doesn't tend to move the market a lot, but it does have an impact on scorecarding for the analysts. And the analysts are the guys that pass the information on to the desks, and the desks are obviously action the trades. And the Fed pays attention to this as well for monetary policy. So while it is red, it doesn't tend to move the market. Even if it comes out absolutely crazy, different as it did on the 10th of June. You'll get a little bit more movement, obviously, the more variance there is, but it's not a big mover. Retail sales is a big mover. More so at the moment than normal, because retail sales are a core indicator of what's going on with CPI and interest rates, inflation and interest rates. The more prices are getting inflated, usually the lower the retail goes. If you get lots of inflation and you get bullish retail sales, that's deemed to be good, and that will have an impact on what the Fed decides to do with the interest rates as it tries to control inflation. So we need to be aware of retail sales. The Fed is looking at those as well, but they are what we call a reactionary news event. So these are a reaction to inflation and interest rates. They don't have a direct impact on what happens to them. They are what happens as a result of them. So they're more of a this is a good indicator of what we did last time. What happened last time we did this with the rates, and what's happened since inflation went up. How's that impacted everybody spending stuff? So it's all just part of the pot. But we do tend to get good movement off of retail. So we've had good news on PPI yesterday. Obviously, we had a bit of a spiky movement there. The CPI figures were all massively positive. We saw there was huge volatility there. Again, lower liquidity equals higher volatility. The lower the liquidity, the bigger the volatility. The higher the liquidity, the lower the volatility. So we're entering into a highly volatile time of year. So again, watch these. If these come out as positive, we should get some decent movements on the US dollar. Franco missed the US dollar CAD, so you might have an opportunity there this afternoon. So that's what we got to look for news today. There was no news overnight, very little. We had, after I sort of finished trading yesterday, we had Bullard pumping the market a bit, didn't really do anything. So no other news overnight that we need to worry about. A bit of China news, but it doesn't really affect us. Have a quick look at the currency strength for those interested. Aussie dollar weakest and yen strongest. So you want to be looking for an Aussie dollar yen long if you want to use currency strength. Basically, the way to use currency strength is find out who's the strongest at the moment, find out who's the weakest. You will find that that will have been doing that. Eventually it's going to go like that. So just do the opposite of what that tells you, basically. Doesn't tend to work very well. I've tried to trade currency strength many times over many years, and it doesn't work for me. But if it works for you, do it. Have a look at the Aussie yen. Yeah, so what did it say? Yen was the strongest, Aussie's the weakest, yeah. So should get a push. Of course, a nice breakout to the upside, look. So that could be session low that's just gone in there. So we might be looking for pullback longs, which kind of backs up my theory on US indices today. Nice bull days following a nice hammer. We tend to quite often get a push, so look for pullbacks and longs, I think, this morning. Right, so that's it on news. So as I said, US dollar CAD, if you missed that one, the ADR reversal, yeah, I mean, I'm long on this. As you can see, I've been longing it for a bit, waiting for this push. We got the push. The push went too far, so obviously I got in as it went too far. There's no ADRs to look at today. US dollar CAD is the one that I played yesterday. US dollar yen is also very extended. I think that it didn't do such a big pullback yesterday, that one. In fact, it didn't do a pullback yesterday. Just pushed up and hovered. Yeah, don't like the look of that. Potential pullback into support somewhere in that area there. So if you get an ADR hit to the low today, that's a good looking long. I'll take that if that gets down there today. I'll take that as a long, because I want to get some yen on. So yeah, nothing on the ADRs. Hourlies flat. You quite often find the hourlies flat during the day. These are much more better paid attention to towards New York, because we're waiting for London to do its moves. Asia goes sideways, which brings the RSIs back into midline, so it's not as good in the morning. 4 hour, we've got Swiss yen. It's extended to the wrong side. I'm looking for longs against the yen at the moment. So this has moved. That was your entry. I think I probably traded that one actually, or something around there. But longs out of there. So I'm looking for a pullback to look for long opportunities. So that's the wrong way. And US dollar yen is the wrong way. So I'm looking for a pullback basically into the support rectangle, ADR and support for a next long opportunity on the US dollar yen. So nothing on the RSIs. So there's not a lot really. I'll whiz through all the pairs if you want, but there's really not an awful lot that I'm interested in today. Just because the movement, everything that I've got into at the moment, it's like I've stepped in dog poo. Literally everything I'm getting into, as soon as I get in, the market's like, oh, you want to go that way? All right, no problem, Lee, here we go. And they're off. And I just basically bank it, which is really alien because I'm so used to spending my life in red, in drawdown, with risk on. I'm not used to things just playing out straight away. But that's the way the market's moving at the moment. We're getting a lot of range-bound activity, which gives us a lot of outs on our trades. We're also getting a lot of trenders, where I'm just basically playing the pullback longs on the trends which are going long, and they're working. So everything's just working as the market is showing you at the moment, which is lovely. But equally, with a lot of range-bound opportunities, doesn't come a lot of mean reversion opportunities. So Aussie dollar CAD, I was in this, I've been in shorts on this basically already, but we're not getting up to RSI extensions on a lot of these trenders at the moment. They're just trending too hard. So the opportunities you do get, that's where I took it out of here. The opportunities we are getting obviously are working very nicely. That market's flying this morning. I really wish I'd have dumped 5 contracts long on that this morning. Never mind. Hindsight. So yeah, pushes up to 60 in trends, if they're strong trends, are really good pullbacks. So I've put the analysis on this one already. I've done it this morning. So short, looking for a retest of the lows, Aussie CAD. I get FIFO warning trying to update my entries. What does that mean? Yes, I have multiple positions in the same pair. It's okay, Lee, you can share my brush and clean your shoes. Yeah. They go in the washing machine. FIFO warning basically is the US hedging. You're not allowed to hedge in the US. If you're using a US broker, you need to take it up with your broker basically, but you can't hedge. Can't trade both directions. First in, first out. Oh, are you talking about futures or are you talking about Forex? So, I mean, basically, you just got to take it up with your broker and read the rules of your broker. America is getting so strict on all. CFDs are illegal in America now, I think. So you just got to contact your broker about it and ask them. I don't have anything like that. I've never had anything like that because it's just not something we get in the UK at the moment. Anyway, I'm with overseas brokers all the time anyway. So, oh, this market's going crazy. Look at that. What a breakout this morning. You like getting on the back of that. Forex, yeah. Contact your broker. They'll explain it all to you. Or just Google it on your broker's help system, and they'll give you info. I'm missing a lot of money here. I'm toying with the idea of moving the live room back to 8:30 and trading the Open, because the Open at Frankfurt quite often is just as good as the New York Open. Sometimes like this. Could have bagged a couple of grand on this morning. Done 880, but could have done better. So yeah, sorry, Aussie CAD. My mind is wandering. Aussie Swiss, looking for shorts on this one as well. I didn't take this one. I do kind of like this as well, Aussie Swiss as a short, just because of that pullback. You can see I traded the pullback and got some nice shorts out of it while it's been bouncing around. I got into the other Aussie, the Aussie CAD this morning. So I looked at this one and was like, yeah, I'd also take that one. But I just don't want to double expose myself on the Aussie at the moment, just in case. So I'm just trying to keep my exposure down to singles where I can. Unless I see a really spot on A1 setup, then yeah, I'll jump in on 2. But I'm just trying to keep it a little bit light at the minute because I've got 10% to protect this month. But yeah, I really like the Aussie Swiss short as well. It's very, very, very rangy at the moment. But overall, we are bearish. It's not sort of neutral on Aussie and bullish on Swissy. So, like it as a short, it's just gone sideways. So, a break of these lows, we will get a flush down to 2 weeks, or the monthly low, basically. June's low, basically. So, I like that as a short as well. You got a good sort of just over an ADR basically down to the lows there. Aussie yen I like as a long, but let me just clear my chart up a little. Let's try. We've got trades I've put onto other pairs on MT4. This is one thing that one of my bugbears about MT4 is just the way they handle trades on chart. They should really only display on the pair that you traded them on rather than just on the chart, but they don't. So Aussie dollar yen, yeah, looking for longs on this. We've got this horrible big reversal alert in this accumulation, but we are above the 24 now. We're above the 72. We pulled back this morning, so I kind of like this as a long. It doesn't fit me at the moment because I've just gone short Aussie CAD, so I was looking for another yen to get into. I couldn't find one this morning, but I do like this as a long as well. Market structure is beautiful on this. It's just sort of running kind of textbook at the moment. It's just got a lower high put in there, but we also haven't put in a lower low yet, and we're turning at the Asian lows. So I'd be calling above yesterday's high on that. Jesus, go for it, market. Big ball move this morning. So yeah, I like that as a long. Aussie New Zealand. It's getting to where I want to be longing this as well. Blimey. Sorry, I'm just watching. We're just running into a load of volume now on the S&P. I think we're going to start to stall this move in a minute. We're just getting to where we've traded all the overnight volume now. Yeah, I like this as a bounce again, because I've taken the Aussie CAD this morning. I can't really take this one because it's the opposite direction. I like this long based on Aussie obviously being stronger than the New Zealand dollar. It's tiny little ADR at 67, but it's exactly where I would be interested in buying it. I'd much rather trade the Aussie CAD at the moment because I think the Canadian dollar is going to strengthen up, so that's a better trade for me than this one because it's going to be slower, but it's a lovely spot, so it's a good opportunity for a long there on the Aussie New Zealand. You can see we have been range bound for the last sort of 4 weeks, and we're approaching low of range, so you've got middle of range there, which we don't want to trade. We want to trade at the highs, we want to trade at the lows. We're down at the lows. So, and this is a hugely bullish pair, obviously. So you want to be looking for longs on it, and it's in a good spot. So you could take a reversal on M15, which is just about to get at these Asian lows, or M5, you're just about to get one as well. If you want to be a little bit more cautious, hourly is going to take you back up into mid-range, that's no good. So yeah, M5 or M15, long Aussie New Zealand. Aussie US is a short. This is accumulating sideways. I just can't get into this. This looks very similar on this 67 line to what we saw on the euro yesterday, which we'll have a look at that parity level. But yeah, it's just not right. I'll be looking for shorts on it, but I need it again. I need it up here somewhere for a short. Not interested down there. CAD Swiss, just a mess. After the Swissy rate announcement, it's gone nowhere, done nothing. It's having a little push up, couldn't get up to there. Now it's pulled back down again. It's just unreadable. CAD Yen longs. It's not quite pulled back far enough. I'm looking for this. As I say, I've been long in this for the last couple of weeks very nicely. I will be looking to long it again, but not here. I want it further down. Swiss Yen missed it off the line, off the 24. We had this support level. If that failed, to take an additional entry, but it's just gone, so missed that one. Euro odd, again range bound. This is in a really good spot for longs off of this range. I just can't long it. I still can't long the euro. The other reason I'm not that interested in euro is the rate announcement next Thursday. So if you get into any euro now and you're not out of it by Thursday next week, when the rate announcement comes out, you could potentially get stuck in the wrong side of a very big squeeze on the euro. I think the euro is going to power up. I don't know. I'd rather wait to see what that rate, wait to see what the rate announcement comes out as, wait to see what the market's reaction is to it, and then reevaluate my directional bias on the euro. It's just a little bit too risky trying to get into a euro position now. I think it's the right thing to do, probably, is start to build positions long, looking for some strength to come through. If for any reason they leave that rate at zero, that's going to go. There's no forecast on it yet either, so until I see a forecast, we've had such mixed messages. Literally every day we're getting something come out of the euro about the refinancing rate, and it changes constantly, and they're always talking about September rates. We're like, hang on, what about July rates? There's very little coming out. Fed was a bit noisy yesterday, wasn't he? Bank of England, but you'll see it coming up on here constantly. You'll get red news coming out of the euro, and it's always about the refinancing rate and their forecasts on inflation and stuff. And there you go, 95 basis points September, up from 84 on Monday. So they're looking at 10 basis point difference in September than what they were on Monday. And then the Eurozone market's now pricing 50% chance of a 50 basis point in September. What about July? It's all the talk about September. 175 on the Bank of England. Wow. So it's too dangerous, I think, to enter into a position you're not really confident on something moving on. So the options are, if you're going to get into a euro, you need to get into a euro that has got news coming ahead of it. So euro US dollar, yeah, because US dollar is going to move you, or euro pound or something like that, euro New Zealand, because you've got something that's going to move it. But if it moves you the wrong way and then the euro goes the wrong way next week, you are going to be in a squeeze for months, potentially. So it's just too risky. You just have to think ahead. But it's a nice little long now. If you're going to use a stop, no problem. So if you get an ADR hit to the downside and you want to go long, do it. No problem. I wouldn't have a problem doing that at all. If I see a massive ADR extension on a euro pair, I'll do it. I'll get in, like I did up there and up there. but you see I'm getting in the way. I'm totally bearish euro. It's a safe bet for me, I think. So if we got an ADI hit to the upside, potentially I'd look at a short, but I'd use a stop. I don't want to get into any position on it. So same with all of these. Euro CAD, I longed it there. The only reason I longed it there was because we were like, this was earlier this week, wasn't it? Super extended. Anything below 85. If we're on the RSI dashboard, if we're in 80s and 85s territory, I don't care what it is. It's going to profit take. Bears are stepping in now on the indices. So yeah, I traded that both ways, but I'd be looking more for shorts on it at the moment. But again, not now. I'm going to wait. Euro Swiss is a massive short. This should remain a short. The euro and the Swissy have got a very weird relationship. You can see this if you look at a daily chart. The Swiss franc is always in control of the euro the vast majority of the time. Where's that? We're going back to 2018 there. So, you know, since the rates were last changed on the euro in 2016, you are Franco. Keep on your pills. I've just read your message wrong. It said save your pennies. We're in a recession. I read that as something else. So yeah, it's a short. The Swiss franc, because of the Swiss banking sector, usually remains stronger. So even if the euro does power up, the Swissy will still have that power to push it back down again. So it's still safe to take shorts on this. But at the moment we're just sideways and doing nothing, so not interested in that either. Euro pound is a mess, not going anywhere. Tiny ADR, it's just not worth trading at the moment. It's a little bit more bullish at the moment down here, but again, I don't know where this is going. It's a weak currency against a weak currency. If next week the rates go up, then our bias is going to shift. So yeah, we'll be looking for longs, and this is in a really good spot to long it, but not until next week. Euro yen, again longs, everything long against the euro. So this is actually quite a really nice long. I do like this as a long. It's the only one I would consider longing really down here. I've kind of missed opportunities on it because I've had, when this has been down here, I've had shorts on the euro, so I haven't had opportunities to get into it, and I've also had other yens on, so I haven't had an opportunity to get in long in it, but I like it down here. It's pulling back at the moment. Like it getting back up to those highs, definitely. Euro New Zealand, again, love it long here. Again, I don't want to get into it. If this thing sits in an accumulation until next Thursday, same as it's done this week. You know, if it's down here or there, wherever it is, it's not going to go far until that rate announcement comes out. No one's going to be putting big money in the market until they know where it's going. And Euro US dollar, we hit parity again. So we tapped it, I longed it there. So I had that pending order on there, remember, which I got out lovely on. We came back, we double bottomed it. Remember I said third time we hit that door, if we hit it, we're going through it hard, and we did. If we don't hit it and we come up and take another run at it, we'll smash it. So we took the lows out, but we didn't hold the lows. So this is all indicative of the euro getting ready for that power up. US dollar has been strong. This is holding. So I think we need to be very careful with this. I love this as a long. And kind of with a stop. But I'm not going to take it because it's not what I want to do. I don't want to use a stop. So this is a beautiful wick off spring as well. We've got the big move down. We've got the initial push. We've got the push higher. We've got the spring low, push back up. If we hover around there for a couple of days, I think this is primed to explode. But I'm just not going to take it right now. It looks beautiful now for a long, and I'll probably regret it. You know, what we'll probably see is The market's starting to get a bit bullish on the euros. We come into the rate announcement next week and we'll be up here somewhere, but it's just not a risk I'm willing to take at the moment. Pound odd mess, just mess. Short the highs on it, which is what I've been doing. So if we push back up into the 72, double topping that area at 125 ADR, I'll be shorting it. Not right now. Pound CAD, same thing, shorts. I'm on the Aussie CAD, so the short is based on Canadian dollar strength, and also we got pound weakness as well. So, but the entry was yesterday on M15. Sorry, not yesterday. Day before. Day before that. Sorry, yeah. I know. No, it was yesterday. Sorry, yeah. What am I talking about? That was the entry yesterday. The reversal alert there. So we haven't actually gone very far. If you look at it, we're actually exactly back at the reversal alert area. So if you missed that one yesterday, we're back there. We're back at the M15 reversal alert for a short on that. So I like that short. I'm Aussie CAD short at the moment. I'm not going to overload, as I say, just at the moment. But I do like that short as well. So you could take that one. We've got this nice area of accumulation at the lows. So we hit the lows, we bounced. We hit the lows, we bounced. We hit the lows, we bounced. Fourth time, bang, smashed it. So we have just pulled back up, but we immediately pulled back down again. So we're at an indecision point. It's going to go one way or the other. The bias is short, obviously. So it looks spot on for me. If we push up, we've got to get all the way through this accumulation again, and then we've got another nice resistance level at 225 ADR. By that time, you're in the 72.24 area. You'll also be extended on the RSI. So entry, if it gets anywhere near their entry, and then short. So that looks good for a short if you want to take it. Pound Swiss, I like short as well. It's just, as you see, I've been shorting the hell out of it. It's at the bottom at the minute, so it's just not right for me right now. It was. We followed that lovely little trend line. Pound yen contracting. I like it long. I much prefer US or CAD yen long, or potentially Euro yen long next week. But yeah, it's week against week. Oh my God, this market's awful. Looking at the since that push up, we've just accumulated. We're just rolling up and down the volume profile at the moment on the ES. Like it long, but not here, down here somewhere. Pound New Zealand, choppy mess. We're getting close now to range lows. But we're not in there. I'm going to set an alert there. So I've got an alert set there at 92,428-ish. So if we get down to there, I'll be interested in looking for a long pound New Zealand. Pound US short, can't take it at the lows. It's not giving big enough pullbacks to get in. I did get in one there. It's just too difficult to get into at the minute. New Zealand dollar CAD, good short. Love this one as well, but obviously this is the same as the Aussie CAD. Yeah, I'm not going to trade both, so take one or the other, New Zealand CAD or Aussie CAD. That's really nice. We're just coming up to the highs. So there's a beautiful support resistance area. So this zone here. Just tapping into it now. Also the 24. So it looks spot on, right, but it's the same principle as the Aussie CAD. This one's just come off of these lows, which is again resistive, and lovely 3-bar reversal. So if you look at that one a bit closer, there's your 3-bar reversal. Push up, shooting star, push down. So it looks good. It's all lined up for the Aussie CAD and New Zealand CAD. We just need the CAD to strengthen up, obviously. That's the reliance on that trade. New Zealand Swiss, again, like it short. I'm in short, sorry. Just got my first position on that one short. Big accumulation. We're up at these highs. So the reason for this trade is these highs. Holding, really holding. I looked at this one this morning on H4, and I was like, this thing's not moving, so I dropped down to lower time frames. It's really not interested in going above that level. Equally, we're not that interested in going below that level either. So as you can see, it's range bound, but it's a range high short. So I took this M5 basically. Well, I didn't take this M5 because I missed it because it was in Asia, but I saw the M5 reversal alert, and we were pretty much in the same spot, so that's where I shorted it from. So that's good for shorts. New Zealand yen is a long. This thing screamed out the gate. As soon as I took that off, we went, didn't we? So we just broken new highs. So this is peak formation low, high. So looking for any pullback long opportunities on that. Not at the moment. US, New Zealand, US short. Again, it's 77 ADR. The Aussie US and the New Zealand US are both shorts, but it's very difficult to find a pullback spot on these. So you can almost take any reversal you want on it short, and you're likely to get no more than half an ADR to an ADR drawdown on this. So it doesn't really matter when you get in. If you look at the moves that we've had on it, it's 77 ADR. We had a 63 pip move there. We had a 75 pip move there. We had a 90 pip move there. We've had a 80 pip move there. We're just continuously making new market structure, but it's just not what I do, but that is what I would do on it. I'm not really worried about US dollar too much. I'd rather wait for a US dollar to get very extended and then take it short from there. Just at the moment, I'm just being uber cautious, which is obviously playing out nicely at the minute. So I'm going to stick with it. US dollar CAD, got out my longs and took the shorts on this yesterday. This is a long against a long, so this is going to move based on news and aftermath of news, which is what that spike was. Yeah, waiting for the news events. Basically, we've got another US news event this afternoon. It could well be positive. If we get a pullback on this morning, I may be interested in a long from this resistance, which would expect to turn into support somewhere here. So we've got this level here as well. Just draw it in properly. Yeah, so we've got that triple top area there. So this whole zone here, if we're back here ahead of news, I might be interested in another long on it. But I want to take one there, so I'm just going to stick another alert on just to those highs. And then we'll see if we can get down there today on the US dollar CAD, and then I'll be looking for an M15 reversal alert around these areas. So if we get a drop out the Asian lows, that might be good to look at. US dollar Swiss, we got, look at that. That area I said I'm interested in shorting it. Yeah, but I didn't short it because I was in US dollar CAD short. So yeah, I traded it, but I traded it on the US dollar CAD instead. But yeah, lovely bounce off of there. So we got extended. I don't like it long term short because these two are strong. So, but that's where I was looking for a bounce play, but I was on the other one. It's the thing, you wait for this all week. Waited 3 weeks for it to get there, and you miss it because you're trading someone else. But this is why you have to do the analysis every day. US dollar yen, looking for longs, again looking for pullbacks to try and get long opportunities on this. It's just not giving enough pullbacks for me. I've taken some longs on it. I need it to be back at a support level, so that high there, I need it to be back here. I need a reason to get in, not just because it's going up. I need it to have pulled back so that we've got some momentum to get the next leg started. The other thing about this one that's a little concerning now, and it's getting more and more worrying with this yen, is the amount of time we've been trending on it. Trends come to an end. Trends don't last forever. They either accumulate or they change direction. This is a very, very strong hard trend based on the yen weakness. Kuroda called 135. Remember, we had that conversation for many weeks about getting to 135. We tapped 135 and we went and bounced off. Then we came back to 135, then we pushed above. Then we hovered around 135, came back to 135. This was the psychological level the market was told to trade to, and we did. Now it's gone above. I can't see a ceiling. At some point, Kuroda is going to jump in on this and say, right, enough's enough. And at any point when he does that, this thing's going to come down like a ton of bricks. And I just don't want to get caught the wrong side of it. So it's slowing down. You can see it's slowing. Yeah, when we got to the 135 level, we've had this massive accumulation off the top of 135. We're pushing up tentatively again. So the 24 is holding nicely. If it pulls back to the 24, I'd be interested again. But, you know, what goes up at that rate can also come down at that rate. So I'm just being a little cautious. All the ends are the same. You know, they've all had big pushes, but the US dollar yen is the overall winner because the US dollar has been the stronger of the lot. So I'm a little bit concerned. Obviously, CAD yen as well has been a little bit stronger, but it needs to be a really good, nice, strong pullback, and I'm just not seeing them. That was a nice, strong pullback, and you see that's why I took the nice, strong pullback, got in long, but just not right. So there's a lot out there, opportunity-wise, but everything is playing out very nicely when I'm getting into it. So I'm just going to carry on taking the top quality positions and waiting. Don't forget there's 3 positions in the market: long, short and flat. There's nothing wrong with being flat and waiting for the opportunities. It's the best way to make money. If you're getting in and you've got a itchy trigger finger, that's the fastest way to hemorrhage the money. So wait for the opportunities. Dailies, we've got a few extensions like the US dollar yen as well. Again, these are all kind of wrong direction for me. So just waiting game, really. But those two are like Aussie CAD, New Zealand CAD, Swiss. CAD Swiss was the other one, wasn't it? Was it? There's another one, Swissy based one. But yeah, so that's what I'm in. Oil, haven't covered this morning. So oil, we had the nice rejection yesterday. Dangerous market this morning on the indices. Be very careful. It's rotating a lot after those initial moves. So we've got down to this level that I said is my buy zone, which is down here. So there's this sort of level here. Yeah, so let me just draw it in. Well, I have got it drawn in. My break-even line at the moment is kind of the level. So you got there. We bounced off it a little bit there. We tapped into it there. Yeah. So this is the a decent support resistance. This is a lovely support resistance. So this zone basically is where I was looking to buy oil, somewhere around the 92 to 95 a barrel. We came down, we wicked straight through the lot yesterday. I entered multiple positions and got back out again. And now I'm looking for that push to start from this level. So I'm nicely exposed on it now. I was a little overexposed because I got in too many positions with the EA by accident, which I've obviously done the drawdown control on, as I explained this morning. So yeah, looking for that push now on oil. I think 90 a barrel. Did we touch that yesterday? Pretty much. So 90 a barrel is basically roughly ADR today and roughly yesterday's low. So this is basically, we hit the 90 a barrel. That's kind of the magic number, because that is where we were trading pre. So we had this little bull run up. This is where we were trading pre-Ukraine, round about 90 a barrel. So this is where the market left off before the major economic impact happened and all the gas oil pipeline debacle. So we've kind of reset, and prior to that, oil prices were gradually increasing. Demand is due to increase next year. OPEC have said barrel outputs will remain. So those two conditions should be positive for oil prices. That is assuming that nothing happens with Ukraine and supply and demand, etc., everywhere else. But whatever happens is always going to be negative. If somebody says we're not going to supply oil anymore, then it's going to go up. If demand increases, which it is forecast to, and it increases at a high level, it's going to go up. If it increases at a lower level, not a problem, because we will be sitting on those stockpiles which are factored in with the futures market at a set price, therefore that price is protected. So oil has got nowhere really to go than up, unless Russia turns around and goes, actually, sorry, Ukraine didn't mean it. Everybody want the oil pipelines open and everyone will buy oil from us again. If the world turns around and goes, thank God for that, that will have a negative impact. I can't see it happening. So positive oil, which is why I'm interested in getting in here. So I don't trade oil normally, but this is a lovely, lovely pullback, and it's been such a big sustained move, and it just so happens it's got down to that level where I spotted it, and it's just ripe. So it's hopefully going to be a nice long, but as you can see, the other reason I'm interested in oil at the moment is its market structure is beautiful. So you know, it just pulls back nicely, pushes up, pulls back, pushes up, pulls back. As long as we've got that movement in the market, we can always make money, because regardless of which direction you're in, you can always scale in and average into these moves, as you saw yesterday. So if this, I expect this to go up now and I can get out. If it pulls back down to there, that's fine. I can get in again, knowing that the market structure should continue as it is, because this is the way the oil's trading. So it looks lovely, but I would be biased long buys. So if it comes back down, I'll just get in again, double bottom, and wait for it to come up. It looks, from the market structure that we've had over the last sort of few months, it would be very difficult not to keep your average within an ADR virtually all the time. And it's doing ADR pushes, look, very regularly. Don't forget oil. We have oil figures every Wednesday. So every single week there is an oil catalyst in the news. It happens every week. So you have always got strong movement on oil happening, and it's all to do with barrels in stock, based on supply and based on demand. So your barrels in stock is either balanced right or wrong for the current demand. If it is balanced wrong, you'll have a difference in price. They will then produce more and bring the consumption, the supply levels back up to the right level. Therefore, the price then goes back the other way, and that's why you see this constant ebb and flow, is them just keeping up with supply and demand and barrel stocks. And as long as that continues, it's tradable for positions, isn't it? So at the moment, it's a lovely instrument. Again, it's one of those things I never really traded, because I tried to trade oil years and years ago, never got on with it. Same as with gold, always kicked me in the arse, basically. But to be honest, I haven't looked at it since I started position trading many years ago. I haven't actually re-looked at oil, and it's the first time really I've started looking at it, only because Ukraine, and the thing that drew my attention to it was Ukraine, and everyone was going on about oil prices, so I started watching it, and I'm seeing these patterns, you know, not just now, but you go back, the patterns in oil are good. Yeah, so you're always getting the nice ebb and flow. So you know, if you shorted oil there and it pushed up, you could short it again and get out. You pushed up, if you shorted that high, you can short again and get out. It always gives you an out most of the time, oil. But you like everything, stay with what it's currently doing and you'll be good. So always stay in line with the current daily trend, you'll be fine. You're going to get the odd squeeze. And this is the thing that worries me about it. It's not a very big ADR, but you get these big ones. So occasionally you'll get an argument over oil. And they always, it's the same with any large commodity, gas, oil, that sort of thing. You've got multiple countries that supply the majority of it. When they turn around and go, if you don't do this, we will do this with oil, it has a massive effect on the price. And then, but they always usually tend to be just a blow up. And then they go, all right then. And they kind of use it as a trade war tool. So you will get the occasional squeeze on it, but looks pretty safe at the moment, so hence being in it. I just thought I'd let you know why I'm in oil, because if you've been in the room for the last couple of years, you'll know I've never traded it. So it's on my radar now. But it's the same as everything, you know. After the Swiss franc collapse, the peg release on the Swiss franc, I didn't trade the Swissy for 3 years because it was too dangerous. Nobody knew what it was going to do because it had always been pegged. So when they removed the peg, I got out of Swissy and never traded it. So you flip in and out of stuff where you see opportunity, basically. So yeah, so that's it for today. Anybody got anything else they want to cover or look at at all? Any questions on futures? Anything like that? Can have a quick look at the futures if we want to. If anybody's interested. Yeah, so 1:30 this afternoon, obviously, US dollar retail. That's the biggie. Just be aware after the market opens as well. We've got potential for a little bit of movement off the consumer sentiment for Michigan, but probably not. Where am I? Sorry, just trying to get to my tick strike over to his little home. So yeah, futures this morning. Obviously, we had that big push after the initial drop, and since then we've kind of mucked about. So we've gone into a rotation on the off of VWAP and the point of control. We've been basically just rotating this area since we pushed after the initial drop. So lots of signs there that was over that drop. So yeah, it's a little bit dangerous at the moment. Just got a bounce off of the big order sitting in there, but difficult to know where we're going. I get the feeling we're probably going to sort of try and rotate up towards these highs today, but Delta's all in line. Nothing. There's no real clues anywhere as to what we're likely to do today. So it's going to be a tricky Globex session, I think. I've just passed one of the Apex evaluations this morning for a 50. It's my 10th day. I've just taken a trade on it and done $125 profit. So that's closed out, ready. Leave that until Monday. That will be live account on Wednesday next week. It takes 48 hours usually to get the Apex ones up and running. And the others, basically, I'm still working on. I'm ahead of target on them. The others have got 3K targets. I'm up to over 2K on both. And yeah, I'm only 5 days in though, so I've got to trade them all next week. I'm a bit too far ahead. So, and Top Step yesterday, my Top Step evaluation. God, I had a nightmare. 2.5K loss. I just New York Open. I just got it wrong, totally wrong on that account. All the other accounts, and this is the weird thing, all the other accounts I traded yesterday, I smashed it. I was just scalping hundreds, 150s, scratches, 70, 80, $80, just made it. Every time I switched over to Top Step, for some reason, as soon as I hit the button, the market went the wrong way. and I just started hemorrhaging, and I stupidly tried to chase it. I doubled my contract size to 2 contracts per entry, and I had 3 losses in a row, lost 1200, and went nope, stop. So I took 2.5k loss on that yesterday, which is really annoying because I was $1,000 away from target. So I'm now back 3k away from target, which is very annoying. But yeah, swings and roundabouts. But I stopped trading, which I'm very happy with because I identified that I was screwing up, so I stopped. Reset this morning, back to square, well, not back to square one. But I'm looking for a 2k day today, get myself back to where I was, pretty much. So I've done 875 on that this morning, so I'm happy with this start. But I get the feeling, like Trevor's just said, it looks dangerous today. I don't really like the look of this, and I'm not quite sure where we're really headed on the indices today. What are we trading at the moment? You, aren't we? September, yeah. It's after the big push back up yesterday. I mean, this does look to me, especially after the CPI move, which was unbelievable. I guess this is karma. I made $1,300 on that, whereas I should have made about 700. I got so much slippage, I made $1,300. I think yesterday the market just went, hang on a minute, we need our money back, and they got me. So yeah, I was a bit lucky on that. I was unlucky yesterday. But yeah, it looks to me at the moment like we are trying to put in a kind of head and shoulders reversal at the minute. We've got this big indecision today so far. So you've got to kind of look at playing somewhere in here today. So I'm looking at lows and highs. I don't really want to trade the volume profile at the moment. I don't think. We seem to be rejecting every time we get up there. We just seem to be rejecting the big volume cluster at point of control. So you know, we pushed up, tried again, we tried again, we came, now we pushed back down out of it, and we're going to push back down in towards this area. I just get the feeling we're going to rotate back up. So it's quite difficult because with this sort of trading, you've got to try and pick a top and bottom. There's not any clues in volume, really. We had a big 7k push, 2k drop, 1k, so this is bearish at the moment, 2k, 2k, 1k, 800. So I'd be looking more for shorts, but up here, I don't want to be shorting sort of down here. Delta's got no clues. It's just a difficult session, I think, today. So I'm not quite sure what I'm going to do. I have 1 day left also on an apex. Awesome. You've hit target, have you, Trevor? Just take a trade. So that's what I've been doing for the last 3 days. So I hit the target in 7 days. So I've done 3 days where I've taken a couple of contracts a day on momentum breakouts, and I've banked, 180, 125 this morning. So I've just banked a little bit of money just to show them I'm still trading, but I'm not getting in with like any size, which is fine. What they're not looking for basically in the trader is someone that basically starts, hits target, and then trades sideways. What I've done is go like this for 7 days, and then my P&L's like that. So I've tailed off. I've pushed for 7 days and tailed off. What they don't want is one trade, hit target, and then just take a contract a day. That's not trading. That's just gambling. So yeah, difficult one, I think, today. What was I going to do? See, we're pulling back. I'm kind of bullish on it, but at the moment, market's telling me go short. So I've just had a bit of absorption at the lows there. This is where I'd be looking actually for some kind of rotation back up on a pullback of this move out the highs. So, but I want to be shorting. Don't know. I can't really make my mind up on it today, so I'm going to stick probably with just trying to take breaks. If we come up towards highs and lows, I'm probably just going to try and see if I can get some breakouts on it. We've got news at 1:30, so likely it's going to be sideways. Yeah, if you've hit target, that's cool. So yeah, just trade it for trade single contracts. Basically, with Apex, what happens with Apex is you on your 10th day, you have to trade, obviously, and then at the close of business on the 10th day, they run a report at midnight, and then the following day you'll get an email. So for me, it'll be Monday. Get an email saying, here's your contract, sign your contract. As soon as you sign your contract, they turn the accounts around within 48 hours. With me, they actually turned it around within 12 hours on my first funded. So it's pretty quick. In fact, I might not even need to sign a contract because I've already got one. But I don't know, actually. I've never gone for a second account with any prop firm, to be honest. So this will be new. I'll let you know. I don't know if it's a contract per account or if it's a contract with you as a whole. I'm pretty sure it's you as a whole, so I don't think I need to sign one. They'll probably just send me the account details or set the account up. But anyway, we'll find out. So sorry, I've got the wrong. Why was that on there? You might not have been able to see a lot of the stuff I've just been talking about because I just realised my screen was on MT4 mode instead of this one. Anyway. So yeah, I'm just not sure what we're going to do today with this. It's a tricky day. So I'm just going to monitor those trades I've got today. Hopefully we'll get a push up on oil. I'm not going to hold oil for long. I'm going to keep scaling out of it and scaling into it. So what ideally I want to kind of do with it is try and keep one position open for as long as I can in there. I mean, I was just toying with the idea of going long off of that absorption and I didn't. Bottom of a volume cluster as well. I should have taken that. That was obvious, really obvious. Never mind. That's because I'm short biased. This is the thing. This is the problem with futures. If you look at a daily bias and you've got a daily bias, your daily bias is telling you to do one thing. The market's telling you to do the other. You've got to try and get that out of your head. That's one thing I struggle with is bias. You've got to stay with the bias the market's telling you. The market's telling me short, but that was telling me take a quick scalp long. So yeah, I'll probably blow it excuse me, in the very next session. But don't blow it, Trevor. You can't blow it. Well, you can blow it obviously, but if you've got your account, like the one I've passed is sitting on, where's my spreadsheet? Where's my spreadsheet? Yeah, so the account I've got passed is sitting on 53,424. So I've got $424 worth of bias on that account now. So I could take a trade right now on that account. I have no idea where it's going, so I'm not going to do it. But I could take a trade on that account right now. I've got $400 worth of potential cock up. So the thing to do is when you pass, don't just pass and get over the line with enough to trade, because you've still got to trade the next day and the next day and the next day. But what you can do is you could set up a trade and just go like that. Oh, fives, hello, cancel. Yeah, so just go like that. So when it, obviously don't put those on, but when it hits that, just go for one tick high or low. That's a trade, done. You're in, you're out. That's you traded for the day. That's all you got to do. They don't like it, obviously, because they want to see you doing it. And this is why I don't want to hit fast and why I'm taking it really slow with these, because I've got so many evaluations on. If I bank $300 in one, which is quite often 2 trades, that's it. Stop. And then next day, go for $300. Next day, go for $300. And then if you go for $300 a day and you've got a 3K target, you're not going to pass until day 10. In which case, then your P&L to them looks like a spot on exactly what they want, a rising P&L line, and they're super happy with you. What they're not looking for is that, or that. Yeah, that's 2 lucky trades. That doesn't make you a trader. That makes you lucky. You can flip a coin. I can flip a coin right now and either make or lose $400. It doesn't make me a good trader, does it? That's the thing. That's not what they're looking for. Oh, you meant you blow the live. Right, okay. Yeah, well, that's a different thing altogether. Your mindset will change. I can guarantee you. Next time you hit that button on that account, you'll be thinking, wow, that was actually $67 I just made. You're the trouble with evaluations, and it's just a human thing. I have the same problem. Is it's not real money until it's real money, and then all of a sudden, the next time you hit that button and you make that $67, something goes, I just made $67. The next time you're in $250 of drawdown on a trade, you're like, holy crap, I've lost $250. What is $250 to you? The psychological aspect of it suddenly kicks in because it's real. And it's not just real, it's big real money. Yeah. That CPI day where I made $1,300 in less than a second was my mortgage. Well, it wasn't my mortgage, it was about a third of my mortgage, but it was, it's a car, it's double my car payment for the month. Yeah. The psychological connections in your brain will kick in, and this is where people struggle, and you start to chase those losses. You got to control that. If you're not trading well, if you take 3 trades and you dump $600 or whatever, stop. Come back, because you can make that back easily in 2 trades, but you could go over the edge a lot faster. There's a hell of a lot of sell orders just come in on that. I'm just going to switch accounts. What do I need to trade today? Those 2 and that one. All of them, actually. So I'm just going to put some sell orders in the market on. So 25s and 50s, 90s, 91s, 92s have all been sold heavily in here on this rotation. So I'm looking for them to slip out the bottom of this rotation and take that low out. Good drop on Delta for the last 3 minutes. Again, push down on 2.7, up on 1.4, down on 2.8, up on 820, down on 2.2, up on 1.3. If we're going to continue to come and retest the lows, this is where we should start our next leg. So again, if this was a live account, yeah, look at how easy it is to make 62.50. It's 4 ticks, 5 ticks. If you want to make $300 a day, you've only got to do that 4 times a day. How easy is it to make 4 times a day? If you just had tick strike on it, and every time this thing went, you hit the sell button, you've got a very high probability of making $50 to $60. If you so want to. just set up a 4-tick target strategy and let it do its thing. But at the moment, this is still me reaching for that 3k target. So my focus is nothing but trying to get X amount per day in the bank, which is what it should be when you're live as well. You should be looking to try and bank, but it doesn't work that way in trading. You don't. It's not. I earn £300 a day as a trader, or 500 or 1,000 a day as a trader. You earn what the market gives you over that month and how well you trade over that month. There is no I earn X as a trader. This month so far, halfway through the month on my FX account, I've done 10%. I'm over 3k up already, and we're only halfway through the month. Other months I've been sitting there on 2% and 5% in drawdown. It's a long game. Got to treat it like a business. If this trade goes against me and I lose $200, that's the cost of doing business. The next trade that goes my way, I'm going to make $350. That's a profit. Just, you really got to refocus your mind when it's real money, because it's different. Just taking one on live here and one on one of the evaluations. Globex is very slow. This is why I was saying about the live room, potentially moving the live room. This is what we tend to get. We get the opening move for the first sort of half an hour to 45 minutes. Half an hour really in Frankfurt is where we get all the nice volatility. And I kind of want to start trading that more actively, because after that we quite often just, the rest of the Globex is like this, literally pulling teeth for the day. Once I've qualified the 250k account, I'll be target 2.25 a day. Yeah, 0.25% a day. It's 0.25% of 250k is what? I don't know. Times 0.25%. Calculator, 625 a day. Yeah, 3 good trades on momentum. That's all. Or 6 good $100 scalps on a break of the lows. This is just double bottomed, unfortunately, which is annoying. That's why I've got fairly tight stops on in Globex at the minute, because if it's going to go wrong, it goes wrong. Because there's very little liquidity in the market at the moment, as you can see. It's just traded 700 contracts in the last 5 minutes. I'm finding, somebody dumps 50 or 100 in, you're going to slip 5 ticks. You can easily slip a couple of points very quickly. So I'm keeping my stops fairly tight during Globex, but we're just literally rotating this cluster, as you can see. So looking for a break of the low of the cluster to come and rebuild somewhere down here, or break out the highs. If we break out the highs, we're likely to rotate back up into the point of control. So my stop really should be, my money may tick out. Oops. If we break 93.75, which is give me 1 tick above the highs basically for a stop run if they're going to do that. If it breaks above that level, I want to be out. Equally, if we get a run below the lows, I'll add in, and hopefully we get a bit of a flush. This is light liquidity area here, and we're probably going to want to run on the lows. So I find that when we break a volume cluster, you'll see this. You'll see it much more in New York because it's faster, but in Globex it's all happening in slow motion. But when you break a volume cluster towards the low, you will tend to flush and retest. This is where they're heading. So if we break this low, I think we will probably come down and retest those lows. And then potentially if you've got a position on and you want to hold it all the way down to here, which I don't tend to do, I'm usually out somewhere around here in case they just rotate back up. But breaking that low, obviously then you get a nice flush out the bottom. You got 3 or 4 points potentially to the downside, so easy, grand. Those are the ones, if you can get one of those a day, you're done, you know. Unfortunately, you don't tend to get them now. You get them between 8 and 8:30. I think risk management has to be very dynamic while scalping. Yeah, you got to be tight. The problem with there's 2 ways to scalp. I do both. I dip in and out of both depending on how fast the market is moving. This type of scalping, we've got some nice sellers just come in there. Sell orders at 91s. You can either get in here and then average in. So if you get in and you don't get the move you want, like I am sitting in now, average in towards the highs up here somewhere. So take a second position there and assume that we're going to continue the rotation. So that second position there brings my average up to there. And then when we rotate back down, I'll get out of the position. So you can either do that, or you can just keep that one and either take the loss, or so this is kind of a more traditional risk reward type trade that I'm in now. But the other option is to basically average in, and then I'm adding 50% onto my risk, because what I'll do is I will put my stop there for this position as well, but the risk on this position is obviously only going to be in this case $75. So I'm adding $75 risk on, but I'm much more increasing the chance of it being a profitable trade. I've got a lot of sell volume coming in on me here, so I would be happy to average into this one. But this is the problem with Globex. It takes one big buyer or one group of small buyers with fairly decent size to move the market very, very quick, because we've got very little liquidity. We've got 30 to 60 contracts sitting at each price point. Somebody dumps 200 in the market, you're in trouble. Okay, so just increase my risk on that position, but now my average is here, so I've only got a 4-tick move to get me out of a break-even trade on it. And if we're going to rotate the cluster, I've got $160 profit down at the lows. We're not going to, because there's buyers. This is exactly what I just said. It doesn't take much for them to move in and take it out. So we're just running on the highs, see if the sellers want to hold the highs, which I don't. So yeah, so there you go. So there's 2 types of trades you can take. That one is slightly more risky, adds 50% risk on, but also increases your odds of getting out by about 200%. So it's a good risk reward way of trading, but obviously you can take less trades because you've got a drawdown limit. So those types of trades, obviously you've got to be a bit careful of, but I don't think this is going to be a nice session. Just saw how quick that move was and how easy it is to move us. You can't use tick striking very much either in Globex, because you heard when tick strike started moving here. So if you were quick off the mark on tick strike, you like there, yeah, you can get 4-6 ticks out of it, but then it will go quiet and it will retrace it back down again. It's just very difficult, Globex. Sometimes I'm amazing in Globex, sometimes I just start to get chopped. If I take 2 or 3 losses, I just kind of go, nah. Tough. Is there anywhere to learn different scalping strategies? If you've got Jigsaw, yeah, the Jigsaw website. Well, no, the Jigsaw website is not actually that great for strategy. There's lots of different strategies. The best thing to do is just watch price and develop your own. So it's the same strategies as every other trading course you will ever learn. Yeah, market structure is market structure. Yeah, this is going to do that, or it's going to do that. Yeah. The same thing's going to happen. The difference is we can see where a lot of trades have occurred in the past, and these will act as support and resistance liquidity zones. So what happened out of point of control? We dropped. So you've got a trade there you can take when we get up to these highs. You can see there's some big orders in here sitting, or not, they're not that big, but there's some orders sitting in here. So when we get up to there, you can take a short, put your stop above that volume cluster. So they're either going to rotate that volume cluster and drop it back down, or they're going to slam through it. We don't know. But if you get into here and you see tons of sellers enter the market, and you see Delta start to turn down, these guys start to either stop moving up or they start to turn down as well, short it. And again, it's different in each session. Breakouts, I love breakout trades. So when we start getting down to this area here, so we slip out this cluster, which is what I was looking for it to do. Slip out this cluster, yeah, and we start to hover around here. I'll enter a position short here, assuming that we're going to have a run on the lows. When we have a run on the lows, I'll add into the position on a break of the low, and usually you'll get a flush out the low, that pop. Take profit down there. So that's just a breakout trade. Think of it like any other breakout trade. It's either going to be a false breakout or it's going to be a proper breakout. So when you break out the lows, yeah, so let's say we flushed down to 76, for example, 76.5. When we get back up to there, yeah, you will see at this point there'll be a big bubble on the chart. Short it and give yourself a stop somewhere behind. Let's say they've built a bit of volume here. Stick your stop behind a volume cluster. If they're going to pop back up, this is where the breakout started moving from. Those sellers are likely to add into their positions. It's no different to anything else, except you can see when the large orders are coming in. You know, if you get push up, push up, push up, and then we start to see absorption, yeah, that's a clue that these buyers are buying, 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 buying. Everybody that bought here hasn't managed to move price any higher. So if we break down below sort of where these massive buyers were, these buyers are going to go, this trade isn't working, exactly like I just did, as you saw there. And they're going to get out of those positions. So when you see big volumes of absorption going on, take the breakout short. So look for where we pushed down to, pushed up. So set an order underneath that level and wait for the break to happen. It's all the same stuff. It's all the same things. But you can. The difference is you can see when the guys are on your side. You can see where the big players were, and you can see where most of the trading's happened. So you know this cluster here. You fall out the bottom of it. You make a new cluster. You make a new cluster. So when you saw what happened here, yeah. We were rotating this cluster. I said, if we break out the top of this cluster, we're going to fly through this light liquidity area and we're going to get up into here and likely find a load of sellers up here to come short. So I'm now looking for shorts somewhere in this area. I'm looking for some sellers to start to come in. If we'd have fallen at the bottom of there, we'd have flown through there because there's no liquidity. There's no trading there. So this is what we call balance. Market is in balance. Happy to trade and rotate and exchange contracts here. This is imbalance, where there is no liquidity traded in the past. And this is what's called price discovery. So we're now going to fly around and try and find an area where the buyers and the sellers are happy to conduct price. It so happened at this point was there. So they start building a cluster. This is another area of balance. So we've got an area of balance, we've got an area of balance, we've got an area of imbalance. And price moves from balance to balance through the imbalances. So you take breakouts through these areas. When you get into this, I haven't got a clue. It's chop. This is the point of control, and the VWAP. Quite often they are used as support and resistance areas. You'll see large contracts, as you can see here. Large contracts tend to sit around VWAP and point of control because the move was down, and these guys here, the big players, move the market down, may add into their positions. But there's no, all strategies fail. Momentum is what I played. If you saw the P&L I put up yesterday, all those trades I took yesterday were momentum plays. So what I was watching yesterday was tick strike and the orders coming in here. And as soon as we pushed up and pulled back, and I saw a large volume of orders coming in, I would go long, wait for tick strike to light up, and then get out. So I'm screaming. As soon as tick strike screams at me, I hit the button, take out whatever I get when it starts to go quiet. And sometimes, as you saw my P&L, I might have made $100, $150, $200. Other times I'd make a $37 loss because it would go rejection, absorption, get out, not interested. But in Globex, you can't, it doesn't happen. So you might find that you just do not want to trade this session. A lot of people hate this session, they get killed in it, and sometimes I get killed, like I'm getting killed today. Well, I'm not getting killed, I've only taken a couple of trades, but sometimes I'm just on it, and it will just be a beautiful structure. But today, it was a beautiful structure, now it's not a beautiful structure. Now we've gone 2.9 contracts long, but Delta's telling me to go short, market's telling me to go long. It's just confusion and chop, so don't trade it. And that's the beauty of journalytics, which is what comes with Jigsaw. Journalytics will give you a breakdown hour by hour where you are and you aren't making money. If you see, and mine is looking actually very much along these lines, if you see that the vast majority of your profit comes from the New York Open and the first couple of hours of the New York Open, and your losses are all coming from Globex, don't trade it. Cut Globex out, and it makes all the difference. What I tend to do is I start trading Globex, see how it's moving, see how much it's moving, and if I'm in tune with the market, and again that's something you can't teach, you either, like Mark Douglas says, you're either trading in the zone or you're not. Some days I just get in and every trade I take is like quick 100, quick 100, quick 100, quick 100, quick, and it doesn't matter which way it goes, I'm in, I'm out, I'm making hundreds. I'll keep doing it. If, like today, I've just had 2 trades loss on the trot, I'll have another go. If I can't work out what the hell they're up to today, I'll stop. And I'll make it all back in the New York session. But there is, and this is what I think the problem with futures education is, it's discretionary. There's things that you can be taught, but everything you can be taught is sometimes when this happens, that happens. Sometimes when this happens, that happens. Yeah. So if you were selling, let's say for example, every time you saw a big blue bubble, you sold it. Lost. Win. Yeah. That could be your strategy, but what you've got to do is spend time in here watching this happen. What happens when we get a cluster of these together? Tends to be a reversal starting. So is it the blue ones at the top or the red ones at the top I should look out for? Until you've been in there and you've seen it all unfolding, you don't do it. Why is this one way more important than all the rest? Yeah, you should be able to see on there. It's very obvious why this one is more important than all the others. You can't actually see these very well, I shouldn't think, but let's see if I can zoom in. Hang on. Yeah, there you go. So this one here is much more important than all the other bubbles that preceded it. Can you see why? Anybody? It's like being in school, isn't it? I know there's a delay as well, so I'm not going to sit here for half an hour and wait for answers. But basically, you can see the order here, right? This was an actual order. Every single one of these bubbles was an order that got pulled. This was an actual order. So what happened was we got a big blue bubble indicating that there were 51 contracts entered long, but they all got absorbed. So we hit that level. There was a lot of activity at that level, but price rejected it. So that is a sign that the sellers have stepped in and said that's enough. Yeah, but you'll see it happening. You'll figure it out. When you see these big blue bubbles appearing and tick strike going crazy like that, normally you get a flurry at the high. Not so much in the Globex session, but I'd be thinking longs here. Look at Delta's. Delta's just ticked up in the last minute. We've had a load of buyers entering the market. Is there a big white thing next to it? No. Yeah, so this is actual buyers entering the market with a chance to push it up. But again, this won't work every time. So what you should be doing now, if you think that's a long, is what I would do, is go one long above that high. So if this guy that's just pushed in here is actually serious about adding to this long, like this guy was, again and again and again to push the market up, I'll get in the next time he has a go. If he doesn't have a go, I won't. So when I see these, I like to enter above the highs. But also, you've got to be cautious of what you're doing. What am I doing here? I'm buying straight into the point of control, the highest traded volume area of the day. There's likely to be quite a lot of activity happening here. And I don't know whether that activity is going to push out through the highs and run those levels, or whether it's going to reject and run back down the ladder. You don't know. You just have to get in and get out. And momentum is the best way, I think, to make money. When you're sitting in here and you enter a trade, and if you look at my P&L today, 8.5 minutes, 4.5 minutes, 10 minutes, 7 minutes, 9 minutes, they're all fairly long trades. When I'm scalping New York, my trades are 5 seconds, 10 seconds, 30 seconds, nothing's over a minute much. But I'm taking $50 to $200 a time out the market in under 10 seconds. It's a totally different thing, Globex. So if you sit through the Globex sessions, you just think, I just can't do this. And that you sit through New York and you milk it. Don't trade Globex. It's your discretion, your choice. You won't know it until you've done it. But all these strategies work in all conditions in New York as well. You'll see the same things happening in New York. You'll see massive. You'll see it happening bigger and bolder. Delta, you will see. You know, look at Delta as a candlestick, if you like. We sold hard. We had loads of bullish Delta coming in, which is probably all these guys exiting their positions. And then Delta did nothing but go up all that time. That's where I'd have been a little bit like, oh, hang on, we might be slowing down a bit. Until then, Delta didn't give me any reason to get out of a trade, or if I had got out of a trade, it didn't give me any reason to do anything but hit the buy button. At the moment, I ain't got a clue. Look at it. It's like traffic lights. Green, red, green, red, green, red. Well, it's not, it's blue, but blue, red, blue, red, blue, red. Oh, you can't see because I've got the screen wrong. Sorry. Yeah, so, I mean, Delta here. Like candlesticks. And he just said, buy. But here, very confusing. But everything's playing out so fast. This is where you get the idle finger syndrome, and you just hit the button because you've had one Delta go up. This ticked a couple of times. You saw one blue order come through, so you hit the buy button, and then all it does for the next 5 minutes is go like that and rotate. What you should be doing is getting back to break even and exit that position, because it's either going to go now. Right now, it's either going to go or it's not. If it doesn't go, likelihood is we're just going to now rotate. Do you want to sit through that? Again, some people love it because it's slow. Some people, it drives them utterly nuts. So, a few big orders coming in. But the big orders that come in and that come in at a level like that one, that's proper absorption. So that is basically buying the crap out of it and the seller going, I'm bigger than you, those are the reversal points. When you get those in line with your trend direction, which in the moment is up, those are good shorts. That's what I find anyway. But you know, again, you'll see different things. You might don't look at this. So, there's a guy, John Grady. He doesn't even use this. Doesn't use charts. Doesn't use anything. He literally uses 4 ladders. He's trading volume and imbalances. You know, you find your own thing. You can also, you know, you might think footprint charts are awesome. Yeah, so you might find these are the thing that makes total sense to you. I've tried footprint trading. I couldn't get on with it, but you know, look at footprint. You might find that footprint makes it totally obvious to you. It's just not for me. That's one time frame. Just got to try stuff at the end of the day. So this isn't going anywhere, and I'm sitting on point of control at the recent highs. Does this look like a good long? Now it does, definitely. So I'm staying in. Yeah, I'm going to watch 38.50. In fact, 38.50 I'm going to add, because that's a break of the recent high, which is up here. Because we'll probably get a pop. We'll get a run, probably up to somewhere about 250, 38.250. If we don't, and all the buyers get absorbed here, I'll get out. Take it, 112. There we go, too early. So this is where I think we probably would get to. 38.0250. And start rotating this cluster. So now what I can do is say, right, okay, 38.0250 is where we push to. So when we pull back, bias now long, positive delta. So I'll be looking, if we come back down into point of control, into this area here, to buy, to go long. If we break out of that high there, I'll be looking to go long. But we're going into a big cluster again. So we're going to meet a lot of sellers up here. So we're going to need a hell of a lot of these guys on our side to give us that in. Yeah, and we look where we stopped, exactly 38.0250. Yeah, because it's the top of that cluster. And this is what I mean. We are moving from balance through imbalance back to balance. So we moved through this area, through this little imbalance into this balance area here. But this is the trouble with trading through thick volume profile, is the moves are so small. It's so hard to get through all of this crap. When you get out the top of here, we'll fly. We'll scream through these guys, unless they're all sitting there on 300 contracts, and then in which case we'll get absorption, huge bubbles forming, and we'll get out. We'll get short on it. But it's real time. We need to see what the market does when we get there, and let the market tell us. Huge delta candle for 1 minute. This thing bright red. Huge bubble. This guy adding into his contracts constantly. We need to be shorting. We're not going to make it through the top of this cluster. But we won't know until we get there and see it. But that's literally, strategy-wise, it's very difficult to give anybody a strategy, I think, in this. You can follow, and it's like any trading, like I said, in the bootcamp. It's the same for everybody in futures as it is in Forex. I can show you how I trade with the tools that I use, but those tools that may not make sense to you. Footprint doesn't make sense to me, so I don't use it. Delta makes sense to me. I can understand why Delta's doing it, what it's doing, and it makes sense. I can understand what absorption is. Makes sense. I love volume profile and showing me where the potential runs are going to be. Makes sense. In my indicators for market reversal alert makes sense. RSI makes sense. ADR makes sense. If you look at it all and you go, that doesn't make sense to me, scrap that bit and use something else. But you've got to find your way in futures. The advantage, there's a massive absorption. Right? But is that absorption? Yeah. Somebody's just entered there. Yeah. There was no contracts sitting there with somebody likely to add in to those contracts and push the price down. So that to me is probably going to be bullish. Again, but where are we going to break? We're going to break through this high, and where we're going to go? Straight into another high volume node, which is likely to hold price down, if not there. So we'll probably slip at best up to 38.05 because there's a whacking great seller sitting there who might add to his orders. Yeah, it's just logic. This is why I like it. But yeah, if things make sense, use them. If they don't, scrap them. But you've got to find your own way. But the big advantage, which I was going to say to this, is when you're using indicators in Forex, we're looking at 5-minute charts, 15-minute charts, hourly charts, 4-hour charts, daily charts. Yeah, they're all big, long time frames. With futures, the big advantage is the speed of learning curve. So if you're in this market every day, so watch this 38.05 level. Yeah. Loads of buyers running in to this sell. Big sell orders. That's absorption. So we'll probably get a pullback from that. More sell orders coming in. 82 contracts short added at that level. So we've got 186 traded, 200 traded against 100. Through it. So these sellers, if we push up 3 or 4 ticks, are likely to puke their orders, and then the buyers will rotate out through the top. More sellers coming in. Added 285 contracts to 100. So they added another 85 contracts short to push price down. So we've got an imbalance forming. Sell side imbalance, which is bearish. Delta. So if you don't want to look out for this stuff and understand what's going on, you don't need to. Delta tells you what's going on. There's a shed load of sellers just entered the market. Price tape tells you what's going on. But that's quite balanced, isn't it? So Delta is giving you a clue to short. This is sort of saying maybe, maybe not. If we push through this level, these guys that went short are all going to have to get out their orders. They become buyers, which will propel us through the highs. That's the mechanics. You can't see any of this in a candlestick, obviously. Yeah, so as I was saying, the speed of learning is much, much better in futures because you are in here every day seeing these sorts of setups unfold 5, 6, 7, 10 times a session. You're seeing this happen over and over again in one session. If you're trading Forex and you're trading the M15 chart and you're waiting for a reversal alert, for example, how many market reversal alerts are you going to get a day on the M15 chart? 1, 2? Are they going to be good setups? Probably not. So you might not take a trade on that day. So you could go 3 or 4 days before you see a setup that looks good, and then you'll take that trade and it will either work or it won't. You won't know, but it will work, and you'll probably find out the next day whether or not it's successful or not. So it's taken you 5 days to find a trade, get into a trade and get out of a trade. In here, I'm doing that 10 times a session, 20, 30 times a day. So your learning curve, seeing this unfolding and seeing what happens at these levels, is infinitesimally faster. So you learn futures quicker. And you can pick up and create your own discretionary strategy in futures very, very fast. What happens when Delta gives us a bearish engulfing, if that's what you want to call it? Well, let's find out. Let's go short and see what happens if we go short after we get a bearish engulfing on Delta. Let's try this. You might be able to, you'll see this happen multiple times a day. I didn't get into it because it pushed through. Okay, so, right, I've learned something there. But you see, you know, there's another massive sell order coming in there. 170 contracts short. I'm getting in at the bid on that. Yeah, so I mean, that's the thing. It's a nice thing to trade because it's so much quicker to make your money. Even M5 is slow on FX compared to this. Yeah, I can get 3 setups in an M5 candle. Yesterday, I made I don't know, 3, 4 trades, all within the space of like 10, 15 seconds of each other, because I was in, out, in, out, in, out, because tick strike was going nuts. This thing was lighting up blue. I was just hitting the buy button, flattening, pulled back, hit the buy button, flatten. I made $300 or $400 in the time that somebody was waiting for an M5 candle to close. You know, it's totally different. But with that goes massive concentration and hugely tiring, and obviously high risk. We're talking $12.50 a tick. So your risk is infinitesimally larger, but then so is your reward. There's, you know, it's pluses and minuses in all forms of trading, which is why I love position trading. It's slow. It's the granddaddy of trading with the way that I trade, and I'm slowly grinding money out the market. Here I'm smashing money out the market, and I can be done in 10 minutes. At a market open or in the first half an hour of a market, you know, it's just different, totally different. But your learning curve is much faster. So I'm watching this here at the minute. We've got a balance to the upside at the moment. So this trade is actually looking like all of these sellers are going to puke. Huge volume of selling coming in, and we've got buyers stepping in all the time. And these guys here, there goes that 63 contracts. That's probably one of these guys here puking their order. So the guy that sold there has just got out. So this is a good time potentially to try a rotation short. So I'm looking here at this level to get in with another contract to try and rotate us back down. So I'm assuming now we're going to start a rotation because we're exhausted. We've pushed up really hard. It's taken a hell of a lot of movement to get us there, a lot of volume. So the market is now going to be tired, and everyone's going to sit there and go, right, what should we do next? Let's see where we're going to go. So this is a good time potentially to get in with a second position short, to try and exit my position with a little bit of a profit. That's the way that I play this anyway. When I'm seeing all this absorption going on. 147 short, 108 short. Only 63 contracts long. So we've got 165 sells to 63 buys, 110 sells to 99 buys. So we've got a lot of sell side imbalance, and now we're rotating back down through the cluster. But obviously we're approaching the highs. The market looks like it wants to come and test the highs, and we could get a lovely big breakout there. There's 103 contracts sitting short there as well. But they've only just been moved into the market, so that's this guy here moving up one level. But this is all sellers. See these white bars hitting the blobs? That's absorption. That's a real sign. And of course, absorption does not mean it's coming down. Absorption means that a load of people sold there and entered the market and gave the buyers a really hard time. Doesn't mean that the sellers are going to win. It means they're giving the buyers a hard time. If there's way more buyers that want this, they will break it. That one though, second run, think of it like resistance. We ran up at it, we struggled, we pushed through, like rugby in a scrum. They managed to push through that way. Next time these guys are going to go, no, you're not doing that again. And they try and push it back. Yeah, so you'll find that you'll get absorption, then you'll get absorption. You may get a third absorption, but if you get 3 absorptions on the trot, the market is, the buyers are out, they're stuffed, they've had it. And also, they've made their profit, so they exit. They become sellers and the market flushes. Market structure. It's exactly the same stuff as we see in Forex. We're just seeing it fast and under the hood. I missed my opportunity from a short there. Look, I'd have been out of this by now with about $100 profit. I'm just going to sellers are starting to step in now in my direction, so I'm just going to stay in this. Delta's flipping short nicely. So what we're seeing here potentially, if you look at this from a structure perspective, is potentially a false breakout, or depending where you want to draw your line, or we are seeing a breakout pullback and run on the highs. I don't know which, but the market at the moment is showing me there's way more people interested in pulling this back. But I've got to be careful of recent levels. Whoops, wrong one. So I've got to be careful of this level here, which is 38.75. So sorry, yeah, 38 round number, big round number 38 basically is this level here. So do I want to take another short? That was kind of a different trade idea that I had to add into my position. I don't want to add, if I get into a position and it immediately goes my way, I'll add. If I get into a position and I take a big drawdown on it, I won't add, because the initial idea I had is not confirmed. I'm just going to protect that, so I can't lose. So we'll see if we ride it out. So if this is a false breakout, I've got the opportunity of slamming this right down. If it is going to be a support bounce, a resistance bounce, support resistance, yeah. So this is our initial break, accumulation pop. Somewhere around here, we're going to start to meet a load of buyers. So I'll be watching this, and I'll be watching cumulative delta to see if it's giving me any indication that at the 38 level, we get some buyers stepping in. It's the same stuff. It's the same stuff as you use with charts. It's just so much clearer. Well, it is to me anyway. But I mean, you know, it might not be clear to you. So we're approaching 38. So sellers are stopping. So I will probably flatten that there. So that's 150. Oh, I got 137.50 out of it, but that's the problem with flatten button. You don't actually get the price you want. The reason I'm taking it is, if you see this low here, we just tapped into that volume node, and we're bouncing. Yeah. So again, this is the beauty of market volume profile. Yeah. There's a reason that happened there. Yeah. It's this volume node. So I've just had a reconnection, disconnection. I just need to log back in 1 sec. There we go. Just it'll rebuild the profile. Tradeovate, occasionally you get disconnections for some reason, I don't know why. But yeah, so that was a bounce off the node, and again, you'll start to see it. Yeah, every time you see something happen, like it go crazy, just look at why. Look at the volume that got traded at that level. Just look for clues. In futures, very soon if you are wrong or right. Yeah. Yeah, I mean, you get confirmation very, very quick as to whether your trade is going to work or not, especially in New York. I mean, in Globex, in the London Frankfurt session, it's very slow and sluggish. Yeah, it may come test VWAP. Again, I mean, there's no reason for it to test VWAP at the moment. There's more reason for it to test 98.50. But what will happen is, people who use VWAP will see that bounce and they will go, oh, it bounced off VWAP. No, it didn't. It bounced off that volume node there. There's no volume at VWAP. Look, VWAP's dead. There's nobody here. There's nobody interested in trading VWAP. There's a lot of people interested in trading this level, however. And again, if it goes like that, everyone will go, oh, it's a VWAP bounce. No, it's not. It's not a VWAP bounce at all. It's a bounce off of volume. It's the market. It's the buyers pushing the sellers out. That's what's actually happening. But things do tend to happen around these levels. Point of control is literally just an area of balance. This is the most balanced area of the day where we've traded the most volume. Does not mean anything. Doesn't mean that it's a support or a resistance or whatever. It just means this is the area of volume. What is more important is what happens when we escape this area. That is where I'm interested in trading, and that is where I'm interested in trading. Some people like to trade that. They like to trade the rotations. I like to use the rotations to help me get out of positions if I'm wrong, by scaling in with a second position at the top of the rotation. So if I take a rotation short here and it ticks up through there, yeah, I know there is a probability of them rotating this area a few times before they make the next move. So I can take a second short there, as you saw me do, or try to do in that case, but and then bring my average up to mean I can get out of my wrong position. Exactly the same as position trading. But you can't do it forever. If you try and position trade on this thing and this thing wants to go like that, you're dead. You just die. So don't do it. Got to have a stop in the market. But there's nothing wrong with scaling in. And if you want to use 3 contracts, you could do. You're going to obviously have to take a bigger risk. I just made you $200. There you go, Trevor. See? But you could also flip a coin and do the same thing. Shall I go long or short now? Don't know. Hit a button. If it moves up 4 ticks, I'll make $100. Make $50 or whatever it is. If it goes down, I'll lose. It's very much the same thing, and it goes up and down a lot, doesn't it? Look at this up and down here. We've got a range here from 97.50 down to 94.25. So you've got roughly a 3.5 point range. You could have shorted it there, longed it there, shorted it there, longed it there, and got out with 4 ticks each time, and banked yourself $300 within, I don't know, 4 minutes or something. Because it moves all the time. We're trading. The best way to describe futures is you are trading inside the candlesticks. Yeah. So when somebody's trading M15, they get a bullish candle on M15. They go, oh, I'm going to go long. I went long, short, long, short, long, short, long, short, and my day is done. I've made $1,000 while you've been waiting for this candle to close. It's totally different. Totally different. Could you show your reconstructed tape settings? Yeah. I have 2. I use in the New York session, London session, in Globex, I use 10 and 10. So I'm looking. Basically the size filter is how many contracts. So I'm only interested in seeing everybody that's placing 10 or more contracts at once. A block trade is where it highlights it. I like them to be the same. So I class this as a big order in Globex. So if somebody's dumping 10 in at one go, they're a fairly decent sized player. If I see lots of people doing the same thing, but you could use 20 maybe or something, and I like them to be only visible for 3 minutes. I'm not interested because I'm in and out of the market as fast as I can be. If somebody dumped a big order for 100 contracts 5 minutes ago, I don't care. That move's already gone. I'm not interested in it. So I'm only interested in seeing here what's happening in the last few minutes, the last 2-3 minutes. You could go 5 or whatever you want, but in the last 3 minutes there's a load of buyers entering the market. I'm interested in that if I'm long. That's all I want to know. When we go into the New York session, I put it on 30, what I call 30-50, which actually is now 30-30, but I'm looking for contracts which are 30 or more. But this will change dependent on volatility. So some days, if I have it on 30 and we're in a very high volume day, that will be lit up all the time, and I sometimes change it to 50 just to slow it down, because you can get information overload. If this thing is just blue, red, blue, red, blue, red, blue, red with 30s, and you switch it to 50, and all of a sudden you get a better idea for actually there's more reds than there's blues. You won't get that on 30s. It's a little bit discretionary again, but 1010 is for Globex, because obviously the volumes here will be sitting in hundreds in New York, and they're sitting in tens during London. But yeah, that's what I have in mind set up. But again, that's going to be completely different for different instruments. So if you're trading, if you're not trading the ES, if you're trading the NASDAQ, you need it completely different. Look at the contracts on the NASDAQ. We're on 1s, 2s, 3s, 4s, as opposed to 10s and 20s and 30s. So on the NASDAQ, you'll probably want that set to 5. 5 is a big order. How did you filter this single small orders? I just answered that one, didn't I? Just setting it to, just set them both to the same is what I do. So those two, reconstructed trades and size filter. But again, play with it. You know, what works for me might not work for you. You know, I'm seeing some sell orders coming into the market now, and now I'm seeing a buy order coming. So you know, I get a little bit more information than you might want. You might want to see only people that are 30. You've got to think institutional with orders. So as a retail trader, there's a lot of guys out there, retail, trading 10 contracts. 15 contracts, 20 contracts at a time. Institutional traders will be dumping 50s and 100s. So when we had this big push up here, you saw some hundreds in there, yeah? Those are the big boys. So if you only want to see when the banks are dumping orders, then you would want this set to 50s probably, or maybe more. But don't forget the banks also don't necessarily add all their contracts in one go. So we got this guy sitting here on 109 contracts or 100 contracts or whatever. That could be a 500 or 1,000 contract short looking to be entered at this level. But he's not going to put 1,000 contracts in there because he's showing his hand. He's not going to do that. So he'll enter 100. We'll get to that level. They'll get eaten up, and then he'll enter another 100. They'll get eaten up, then he'll enter another 100. That is what absorption is. This is basically somebody running the high. We're running the highs. Retail's going long. Institutions are going long. Barclays is sitting there going, I'll have every single contract you can give me, and I will just keep adding in contracts until you guys stop. And then the next time I add 100 contracts in, we'll flip down a bit. And then you guys that have all gone long will go, I'm wrong. And you will all get out your contracts and go short, and then I will benefit from this drop. That's what the banks are doing and the algorithms are doing. 49 contracts just came in short. Yeah? Look at what was happening. Big blue bubble, big red bubble. Yeah? A lot of contracts coming in short. At this level, we've traded 144 short and 72 long. It doesn't mean we're going down. Yeah? If it was here and I saw 100 contracts entered, and then another bubble formed with 250 contracts, then another bubble formed like here. Look, we had a bubble there, a bubble there, bubble there. We had lots of bubbles appearing in tight consolidation at an area where there are orders sitting that haven't been pulled out the market. That is proper absorption. That is usually, and that's why we took that short, that is usually where we will find the big guys. And a lot of the time, you will see them at highs and lows of clusters. Yeah, so this 106 contracts here, yeah, has been entered since there. So it's only been in the market for what's the time? 15 minutes. So this has only been in the market for 15 minutes. This big 100 contracts up here. If we get there, yeah, and when we get to this price here, this disappears and jumps up to there. That's not a real order. It's a spoof. If we hit that and we get a bubble, and we find that suddenly we do 500 contracts short and 100 contracts long, that's a bank. And do you think the bank's going to want to hold that price and push it down to make a profit? Yeah. So they will just keep adding and adding and adding because they can. See, that's what we're looking for. And when we get a breakout, we are looking for the banks to step in with us and go, yep, we like that too. And this is what this is all showing us. But during Globex, it's very difficult because you don't have those huge volumes coming in. So it's just different. But we're at a double top now. So we can reset here at the double top. That's another really handy button. The clear total trades, the trash can. Clears the buy and sell columns, clears the meter. So I can look at this double top and see if we're biased long or short. At the moment we're biased negative 11 contracts, plus 7, plus 21, plus 27. A lot of buy orders starting to come in. This is above the midline. So it looks like we're going to want to buy through this. So buyers are stepping on board. So it's probably worth having a little buy out the highs. One tick higher. And if we break this level, we're very likely to have a run on the highs. So that's worth a shot out the highs. We saw them backing this up. Good delta came in. But right now, sellers are stepping on the toes. So, it's just, it's just logic. To me, it's just logic. But this is what I mean about looking at different things. These are the things that I like to look for. But they're not necessarily right for everybody else. You'll have a lot of futures traders who'll be like, that's a ridiculous strategy. Why don't you just do this? It's like, well, because that doesn't work for me. I've tried strategies I've found in futures in the past, and it's just the best thing you can do is spend a week, take a week off work, sit through 5 Globex sessions, sit through 5 Frankfurt Opens, sit through 5 New York Opens, sit through 5 New York closes. By the end of that week, you'll have way more information about making your own strategy, and you'll find something that just goes, every time that happens. And you'll just go, well, that's all you got to do, isn't it? Every time you see that happening and that happening, you just hit the sell button and you take 8 ticks out the market. If I could do that 4 times a day, I've just made $400. If that's yours, that's yours. That's what you got to do. When you get the New York Open, you'll see it will write open here. Yeah. This afternoon, when you're trading in New York, when it opens, right, this clears completely. Volume profile clears down. Watch what happens when we trade up and when we trade back to the open, or when we trade down and trade back to the open. Yeah. And then watch what happens when we make a move. And if we make a move and trade back to the open, watch what happens when we get back to the open. It's a very, very important level, because when we open in New York, what the market is doing is they're executing contracts for clients, and that's why we see that horrible whipsaw reaction a lot of the time at the open. Yeah, and why people wait for the 5-minute close on a candle, or 15, whichever they want to use at the open. But watch what happens after the open. When we actually decide we're going to break out above that high or that low, typically, if we return back to the open, we'll go in the direction that we actually went initially, because what we're doing to start off with is we're executing orders, and then we go into price discovery mode, building a volume profile. Yeah. At the open, usually around a point of control becomes where the open is. After that price discovery phase, we then go, let's have a crack long, and we make an imbalance. If we build a volume cluster there, trade back into that imbalance and push higher, we would never get back to that open. Very rare. But once you've seen that happening 5 times, if you are paying attention, that's why open gets written on here, because it's a massively important price. If we're trading above the open, we're likely to go long. If we're trading below the open, we're likely to go short. Why? Because there's more people selling or more people buying. It's not rocket science, it's just pure logic. If everybody's buying, we need to buy. And this is why this is here. Yeah. Delta tells me that there's a load of buyers in the market. This is a blue line. Price is going up. We're pulling back on low volume. We're pushing up on high volume. I want to buy it. Yeah. That's why I'm sitting with that. But at the moment, there's a load of sellers. But somebody else is sitting there going, we broke back down through the point of control, so I sold it. And he made 8 ticks. Well done. That's your strategy. Good man. You just made $100. I didn't. There's 1,000 strategies. But it's not a strategy. It's not a mechanical strategy. It's what you see and what you feel is going to happen next is when you press that button. If this thing lights up green and then goes quiet, then it lights up green again and goes quiet, I will put a buy market above the last high, because the next time this thing lights up green, it's taking me with it. If it doesn't light up green, I don't get in. It's fine. There's so many strategies you can use, but what you're really doing, if you think about it, all you're doing is you're playing momentum. Yeah, at the moment the momentum is short. If you want to play momentum, go short now. You're probably going to pull down to there. There's a volume cluster. We've done it once. And what we're doing at the moment is we're rotating. We are rotating volume cluster. Short it up there, buy it down there. If we break out above these highs, we're going to run the highs of the day. And I'm going to take that, I'm going to break that, I'm going to take that, and I'm going to make $300. That's my plan. Your plan might be totally different. But, that's just an idea. At the open, yeah, as well, and this is something I do a lot. When the market opens in New York, I wait for a volume cluster to... You'll see they will form a volume profile. There'll be a high and there'll be a low outside of that volume profile. So you'll have something like this. Yeah. I play that break and I play that break. I don't care which it is. I play them both. I have a pending order there and a pending order there. While they're doing this argument, I'm not interested in arguing with them. What I'm interested in is who's going to win. When they win, they'll go. And I'll take that and I'll make $100. Then they'll pull back and then I'll put an order there. Then I'll take that. They'll pull back. I'll take that. They'll pull back. I'll take that. And I'll keep doing that until they pull back and do that. The market structure shifts. And then I'll be wrong and I'll take a loss. If I can take 4 wins and 1 loss in the first 20 minutes of the open, I'm done for the day. Simple. I'm not thinking about anything complicated. I'm not having to analyze things. I'm not having to look for bubbles. I'm not having to watch levels. I'm literally just playing momentum. This thing's lighting up green like a Christmas tree. I'm taking every break long. And if this thing stops lighting up like a Christmas tree, I'm going to get stopped out. When I get stopped out, I stop having a long bias. If you get a trend day, it goes like that for the first hour. Yeah. Every single break to the high, you will make $100, $200. It's just easy. So easy. But you've got to do it. So just New York Open, go on a demo account this afternoon, just go like that. Yeah. Leave those 2 orders in the market now if you want to. Right? It'll hit them or it won't. If this thing now goes down there, I don't care. If this thing comes up here, I've got a very high probability, because there's no trading happened here. If this thing's sliding out the top, there's 120 orders there, right? If that guy stamps on those orders, fair enough. If he doesn't stamp on all those orders, the buyers are going to ping through there. They're going to get to a point where there's no liquidity, and there are thousands of orders sitting there like me, waiting to go long on a breakout of the highs of the day. If it's going to be a false breakout, it's going to push up and drop. If it's going to be a real breakout, it's going to push up. What's going to happen in both of those accounts? It's going to push up. I'm going to make money on that, and I'm out. I'm out there. I don't care what happens after that. Couldn't give a monkeys. All I'm interested in is my $200 on that little pop. But again, that's just something I've observed happening over and over again, and therefore I do it. Double tops. When we break a double top, we get a pop. I'm out. And that's what you've got to look for, the pops. And that's what I say, if you get into a position and it does that, you're stuck in a rotation. You've got to get out of that rotation. Your choice is either to hope it comes back to your break even in the next 5 or 10 minutes and just scratch it, or you can add a position at rotation high and hope that it does do the rotation back down again. But if you get stuck in one of those, and sometimes you get stuck in those and you just get chopped, and I just, like I said, I lose, and if I lose it 4 times, I just think, well, they're just not playing ball at the moment. This is still bullish. 10,000 contracts up, 1,900 short, 2,700 up, 2,300 short. As long as we don't push down on more than 2,700 contracts, we're still bullish. But we haven't got delta on our side at the moment, it's flat. So I'm looking for some orders to come in long. So this right here is a breakout, accumulation, bounce. Why not rotate back up here for the next half an hour, 15 minutes, 5 minutes? I don't know, it doesn't matter, does it? There's your trade. So if they're going to rotate, they're going to push up through here. If they are not going to rotate, I will stop out just under that low, or maybe probably behind that volume node, because that volume node is the last reaction that we had. Yeah, but I'm not looking for up. I'm looking for $100. But small, slow trades like this, 5 times a day, that's 20 grand a month. Sorry, I'm going off on a mission, aren't I? But like I say, I can't teach anybody a strategy. You've got to work it out for yourself. And the only way you can work it out is by building muscle memory as to what tends to happen. I'm looking for here some big red bubbles to form. Ideally, that would be lovely, because it means that we've sold hard into this level and we haven't gone anywhere. If we sell hard into a level and we don't go anywhere, likelihood is the buyers are just going to rotate us back up. Yeah, selling, not getting anywhere. Look at where we stopped. So if you want to here, you could be super aggressive. Yeah, let me just take that out of the market, move this one down. All right, so I could be super aggressive right now. My assumption is we are just going to hit this level and rotate again, back up through there. If that happens, why not take a 3-tick stop? Yeah, I'm going to risk $37.50 with an upside of $400, $500. As it happens, we push down through invalid. When it's moving this slow, you can take these tiny little ones, but I find you just get stopped out all the time, so I don't do it. But, that could be part of your strategy. What happens when we push through a high volume node? Observe what happens next. Where are we going to slip to? Personally, I reckon we're going to get stuck here. So I could be selling now until down here. That could be your play. I don't know. It's this is what I mean. You just got to feel. It's more of a feel that you sort of build up with it. But there are obvious things. This tells us that everybody that jumped in here was trampled on. A lot of the time, you can sell those. Sometimes you can't. But that's just why I use a wide stop. I use a 16-tick stop, which is $200, or a 32-tick stop, which is $400. I use a 32 normally in New York Open because the moves are wilder. But a 16-tick stop on that, I probably would have survived that, and then I would have added, which I did. Isn't that the trade I took? I can't remember. But yeah, I actually got in there, didn't I? So, but if you got in there, you had an opportunity to get in there on the second absorption. It's the same principle as my position trading, isn't it? If you're going to do it that way. But I'm not going to take more. I'm not going to keep. There's some people out there. Nick Leeson, actually. Nick Leeson, the guy that broke Barings Bank. He runs a signal channel, trading futures. And he doesn't use a stop. at all in his futures trading, and he just keeps getting in with a bias on the day. He's been hundreds of points in drawdown and closed out at a loss and gone, this day was a losing day, and then he'll scale into something and he'll get out with a massive winning day, which is absolutely fine. But if you're running a prop account, you can't do that because you've got a limited loss, haven't you? But yeah, that's why he broke Barron's Bank. Yeah, 16 ticks is a 4-point stop on ES. Yeah. swings on ES, depending on the session, you'll find swings on ES are normally, as you can see here, they're normally bigger than 16 ticks. So it kind of comes into where you're taking the trade. If you're taking a trade short up here, I wouldn't use a 16 tick stop. Yeah, because if it runs out at highs here, they're going to challenge the higher day. So I wouldn't take a stop that big. But when I enter my trade, it will automatically put a 16 tick stop in for me, and I'll just move it down to where I think it should go. In this case, it would be here. So if I got in short here, for example, my stop is going to be around there. Because if they run out the high here, it's going to fly. So I'm not going to let it fly up to $200 loss. I'm going to take a 50 or a 67.50 loss. You just have to adapt. But the beauty is, when I get into the market, I want this done for me. Bang. I want to be able to just do that. So I have the stop and the TP placed for me. And if I think I'm going to want to go for a run off the highs, I'll move it up. But in this case, I want to be under those lows. So we're range bound now. 2,000 short, 3,000 long, 3,000 short. I'm assuming we're going to rotate the range now, because we pulled down on the same volume as we pushed up on, and we did roughly the same distance. So I'm going to assume that we're going to hold ourselves in a range ahead of the news at 130. We had a load of buyers stepping in. In fact, we're actually looking short since I entered, but just watch Delta and see what happens. But I wouldn't expect this to be a big, fast trade. I would expect this to be a slow grinder. But if we push up into this sort of cluster here, where we've got very large volume nodes, if we get to 62.50 and profit, for example, I'll probably pull my stop up and reduce risk to sort of 112.50 behind here. And I'd like to see some volume come in so I can get myself up to a break-even stop. And this is where you'll see on my P&L, you see lots of scratches, $12.50 scratches, $12.50 loss scratches. I class anything 25 to 25, anything in that range as a scratch. It just hasn't worked. It's just not happened. So this is a loss. That's a profit. Anywhere in there's a scratch. Anything above 37.50 banked on momentum, I'm happy with. But the ones you want are where this thing suddenly goes crazy. We get massive volume of large volume orders come in, and we get that 4-point move or 2 or 3 point move in one flurry. If it does that, I'm off at 150. I'm out. Take my 150 and go. But I don't use a risk reward. I don't say, oh, well, because I'm risking this, I've got to make that. I'm not interested in that. I'm thinking price is going to go up. I don't know where it's going to go up. If I'm sitting on $400 profit for the day and we get to 137.50, I'll take that. Thank you very much. Take my 500 quid and run. Done. I have a negative risk reward, but my strike rate, as you see from my P&Ls, is in the 67 to 75% a day. So I get way more trades right than wrong, but I'm going in with a 1-to-1 risk reward and taking what I think I can get. If we get to here and we start ticking up like that, the buyers obviously aren't able to crack it, are they? If I see a load of sell volume coming in, oops, maybe I don't want to be in long. There's not really any volume. They're not actually big orders, are they? They're just 11 and 19. one big market order will take that out. So, but yeah, but that's. I think it's you'll learn a lot more from somebody explaining their thought process as to what they're seeing and what they think is going on in the market than you will someone saying, when you get here, if you see a bubble this size, it has to be above 65 contracts, then you should hit the short button with a 3-tick stop. Those mechanical systems just don't work in this environment, I don't think. They do work in FX with candlesticks because we are basically trading patterns. In here you're trading volume, nothing to do with patterns. It is a little bit, obviously, because double tops and things like that. Accumulation, propulsion moves. Yeah, it's exactly the same stuff. Look, propulsion gap. We traded into the propulsion gap, and the buyers stepped in and added to their positions. The market theory is the same. It's the market. There's buyers and there's sellers. There's human beings pressing these buttons. Therefore, the same thing happens on every market. Vegetable market, eBay. It's the market. Supply and demand, volume, momentum. Yeah, fidget spinners. Look at fidget spinners when they came out. Those toys that all the kids had. They started off. They came out. Someone was selling them for $2.50. Within 2 or 3 weeks, they were selling for 15 quid. Massive demand, not a lot of supply. Price goes up. Same principle everywhere. Yeah, better to know why than what. That's exactly right, Trevor. I'm entering the market because I'm expecting they will rotate because there's low volume. My why is that's what we are doing. Volume is telling me that's a likely scenario. I need things to back me up. Those guys, thank you. Well, that was well timed, wasn't it? I need people to back me up, and all of a sudden, like 50 contracts coming along. Signs. If this doesn't happen and this just goes sideways, and all we do is we drop 3 or 4 ticks, I'll probably jump out here. But as it stands at the moment, it's not looking bad. And what I'm expecting to happen is starting to play out. But again, a mechanical system will tell you now you need to move your stop to there and your take profit should be there. My take profit at the moment on this particular account is 287 flat 803 is probably going to be around about 137.50, because then I know that I've just got to make one more trade for the day and I've hit my K profit target on this particular account that I'm trading now. So my TP is nothing to do with mechanics, risk reward or anything. My TP is based on I want to make $1,000 today. 137.50 gets me one trade away from doing it. You can't. It's just not something you can stick labels and stuff on, is it? It just doesn't work that way. I find it very, very interesting the way you explain it. Yeah. Hopefully it helps. But don't listen, do. Go and do. Yeah, like I say, do it. See what happens when that happens. See what happens when that happens. Does that light up if you've got it? If you haven't got it, it doesn't matter. That's supporting me, yeah? We got 770 contracts traded long since I got into the position and only 576 traded short. Everything's on my side. So I'll reduce my risk a little bit. Not necessarily going to make it as a trade, but you will, when you sit through it, you will see things happen. You'll see certain conditions, like that big drop there, right? We've bought and bought and bought and bought, and what happened was we pushed up to there and we've pushed all the way back to my entry price. You'll see this happen over and over again. You'll be in trades and you'll jump up to 100 profit, you'll drop. You'll jump up to 100 profit, you'll drop. You'll jump up to 100 profit and it will slam, take you out. The next time you see it jump up to 100 and drop, jump up to 100 and drop, you'll be like, last time this happened, I got tanked, I'm going to flatten it. And it will go like that and you'll go, I learned something. But you only learnt that because you watched it happen. And being in this market, you'll watch that happen 10 times a day. After a week, you've watched it happen 50 times. after 50 times of watching the same thing happen again, next time you see that, you'll know what to do. And you might think, next time that happens, what I'm going to do is I'm going to flatten this position and I'm going to hit the sell button, because I know last time that happened, it dumped by 8 points. So close that position long and short it. Cut and reverse, it's called. That's why they have a term for it. It's called a cut and reverse. You go long in the market, you see the opposite side getting control, so you cut and reverse. To cut and reverse, what I would do is enter 2 contracts short. So if this now tanks, what's going to happen is I'm going to take a 12.50 loss and the market's going to flush down for an 87.50 profit. That's a cut and reverse trade. You don't need to know the terminology, but if you see the same thing play out 3 times, next time have a plan. That's all you've got to do. There you go. So I've cut and reverse short. I don't know if I should have done that there, because I'm just demonstrating a point. But but that's how a cut and reverse works. I'm just going to flatten that because I don't actually. Yeah, well, now I do want to be short. See, got a little bit of DAX selling started there. Delta's flattened out. All that buy delta from there, we made that much progress. We're just flat. It's not moving, so you just shouldn't be in the market really now. Cut and reverse again there. No. Oh, I'm just going to flatten that. Don't like it. It's not going anywhere. But yeah, so just you know, feel your way through it. But I've been asked, you know, a few people have asked me to do strategy videos, and that's my strategy. I don't have one really. I follow the momentum in the market and what the market seems to be showing me at the time. Like short now. So markets. So my thoughts now, I'm seeing this happen. That's a double top. We've made a new lower low, so that must be the pullback on the next down move to this zone here. Pushed up on 1.8, pushed down on 3. These lines have now gone red, so it looks a bit bearish, doesn't it? So maybe I'll start to try a bear position. But look at the speed it's moving. It's just so hard to trade it when it's this slow. You want to wait for some volume. You want to wait for some bubbles to form. That's all they are, is volume. It's just big orders. It doesn't tell you what the intention is of those orders. It just tells you there's orders executed. Lots of them. So there's something happening. Your job is to decipher what, based on everything around you. And you will see and feel everything around you. You'll suddenly see out the corner of your eye, and I have this a lot. I see out the corner of my eye, this, see that ladder just reset. It just jumped, yeah. I see out the corner of my eye these ladders, because I'm watching over here all the time. At the corner of my eye, I see these ladders jumping and resetting, jumping and resetting, jumping and resetting. And I don't see the same happening here. So at the corner of my eye, my brain is being told that the NASDAQ and the Dow are pushing, but the ES isn't moving. I'm waiting for some big orders to come in, so I'll place a pending buy here because I've seen these two guys go nuts out the corner of my eye. But there's not a strategy there, it's just something I see happening a lot. And it doesn't happen very often, but when it does happen, there's usually a couple of £100 in it. Again, it's not a strategy, it's what they call it, follow the leader. You're following the faster moving markets, which happen to drag the rest with it. But it's not a strategy as such, it's just something that happens in the market. And 5 days in here, during New York, you'll see the confluence. Look at that. I don't know if that's big or small compared to what's been going on. It's a massive bubble, so I would say, yeah, it's probably a huge absorption. So if the DAX, the Dow is going to push long from here, and I see the NASDAQ pushing up as well, I'm probably going to shift my bias on the ES. But again, you know, you can't put all of this into a spreadsheet, into a PDF, and say this is how you trade futures. Difficult. But anyway, there you go. I'll this will be up on YouTube anyway if you want to rewatch it. But if you glean some information out of it, fantastic. But I can't give anybody any real direction because I just don't. I don't know. I don't know where it's going. Neither does anybody else. Not even the banks, until they dump their massive orders. Then they know where it's going because they move it. But apart from that, your guess is as good as mine. Right. Let me just quickly flick back and we'll have a look at where we are in the FX markets. Nowhere. I'm not surprised. And that's another thing you'll notice. The futures market doesn't move, neither does anything else. It's all linked. Oil, we're stuck. Back at my break even. No movement today. We just popped out the Asian lows and back in midline. New Zealand dollar Swiss is working well, but not gone anywhere really. And Aussie CAD, not gone anywhere. Has anything moved? Nothing's moved. It's flat session. So we're waiting for retail sales for the US dollar. 130. Once that's kicked in, I think we'll probably get all the movement starting this afternoon. So just be aware of that. And I think we just got to wait basically until we get there. Okay, so that's it for me today. I'll be in the Telegram group if you need me as usual. But I've got nothing else planned to get into today. I'm just going to manage these positions and see if I can squeeze anything out. It'd be nice to end the week with a profit, but unless we get any movement, I haven't got much I can make at the moment. As I say, 0.5% roughly. I want to make somewhere between 175, 200 pound a day or dollars a day. So if I see oil pushing, I'll probably take an oil off, and we'll see what happens with the others. But it's Friday. It's quite a bit slow, isn't it? So, but yeah. All right. So have a good weekend, everybody. I'll be back on Monday, same time, 7:50. I'm in the Telegram group if you need me. And if you're interested in Jigsaw, if you've watched all of this and been bored to death, but if you are interested in Jigsaw, there's links in the description below to get discount codes. So go and have a look if you want to get Jigsaw, if you want to start your futures journey. And Apex at the moment, the prop firm that I use, has got 50% off as well. There's links on my website to get the discount codes as well for that. So okay. Have a good day. Hopefully it's profitable, and I will see you guys Monday.